continue with representatives of the Treasury, Revenue, Small Business Law Group, the ACNC, the ATO and the TPB. And I'm going to go to Senator Chandler.
Apologies, team. I'm just gathering my thoughts. Which are harder to gather at this point in the evening than before,
Agree.
I assure you. I just might start with the document that the Secretary provided to us earlier in the day. This was in relation to some CGT modelling. Sorry, it was in relation to questions regarding the CGT changes, and it was provided to a journalist at the Financial Review, and we've asked for it. The Secretary provided us, and I flagged when we'd gone through an initial set of questions at the start of the day about the provenance of that document, that I'd come back with revenue and go through the changes at a more granular level. Has everyone at the table got that document in front of them that the Treasury provided? The committee has tabled it, thank you. That will make things easier. So, turning to the details included in that analysis, I'd like to discuss the calculations of effective CGT rates under the government's new CGT rules, which I think that starts on page 2 and goes into the table on page 3 of that document. So that outlines with 3% inflation over a 10-year period, this analysis claims that a top marginal tax rate individual with a portfolio of assets will face a CGT rate under the new rules of 21.4% if the overall portfolio grows by 5.1%, 30.7% if the overall portfolio grows by 7.3%, and 36.6% if the overall portfolio grows by 10%. So if these figures are correct, that already illustrate just how quickly the effective CGT rate escalates, jumping by over 15 percentage points if you manage just to grow the value of your business or your assets by 10% a year instead of 5%. Is that correct?
So yes, Senator, under a system of real gain, when the return is higher, much higher than the rate of inflation, you would expect to see a higher effective tax rate.
So, are these figures correct, though? I know that a former Treasury official, I think Jeff Francis, his name was, pointed out in the Fin last week that unless every one of the individual components of the portfolio makes a real capital gain over the period.
So these calculations were done by our Tax Analysis Division, so I might invite Dr Johnston again to come to the table and he can explain how the calculations were done and the nature of the product, being a portfolio of shares.
Thank you.
Has a difference.
Shane Johnson, Tax Analysis Division. So, what this analysis looks at is the effective marginal tax rates should investments yield that particular rate of return, and those rates of return are included in the left-hand column there. So it would be if an investment generate a rate of return for 3%, if a asset generate a rate of return of 5.1%, which is the broad return on the S&P ASX 200 over that 10-year period, or if an asset generated a return of 7.3%, or an asset returned generate a return of 10%. So that's how they're calculated.
Okay. But the difference between them isn't minor, is it? I mean, it can make, as those numbers show, it can make the effective CGT rate more than double again, can't it? For the moderate growth portfolio, or for a moderate growth portfolio, I should say.
So what these are the effective tax rates, effective nominal tax rates, underneath for an assets that generate those types of returns. So if it generates a 3% return, that's under this because that's generating a return of around inflation. It's going to get a nominal effective tax rate of 0%. If it's if an asset's generating a rate of return of 5.1%, we estimate that the effective tax rate would be around 21.4 and so forth. So these are nominal effective marginal tax rates based on the rates of return that are in the left-hand column. If we converted them to real, then the effective tax rates would be more uniform.
Mm. So can we just take an example of a two-asset portfolio, so which returns 5.1% per annum over 10 years with inflation of 3%. And I don't think I've read between the lines too badly. I think that's what we've got here in the analysis. But suppose instead of both assets in this portfolio going up in value by 5.1%, one of them stays unchanged while the other one goes up by 8.6%, giving the same overall portfolio return. For such a portfolio, wouldn't the effective CGT rate for a top marginal rate taxpayer be just over 34%, not 21.4%?
So when we start looking at portfolio, it's going to depend on a range of factors, including the holding period, the rate of inflation, and other factors as well. So,
okay. But I mean, realistically, in a portfolio, you're going to have some assets will go up and some assets will go down, as opposed to this sort of scenario that you've used in your analysis here where every component of a portfolio is assumed to go up in value faster than inflation. That's not always going to happen, isn't it? In fact, I would have thought in more cases than not. It won't happen.
It would depend on the portfolio, which assets you're investing in. Range of factors will depend on when you decide to realise assets, the timing, the holding periods, a range of factors. So
yeah. I guess what I'm trying to get at.
What these do is to provide an example of how to compare the arrangements of assets with this rate of return compared to the Australian tax arrangements and other arrangements that apply in other jurisdictions. But the results will always depend on the type of assets that's been invested in, the holding period, the amount of inflation, the inflation rate relative to the nominal return, a whole range of factors that will have an impact on the rates.
But the problem we have is that as you've said, there are a range of different factors that can impact this, so that what you've modelled out here in this analysis is basically the least likely scenario of all of them, isn't it?
No, if an asset generates that rate of return, which assets will generate those types of return, these are all reasonable rates of return on a particular asset, ranging from something that's generating just inflation to something that's generating a 10% return and things in between. They're all reasonable rates of return. We haven't. These are all reasonable rates of return on a specific asset.
Treasury has said many times, and I think the Treasurer may have done so as well, that the goal with these tax reforms is to reduce distortions. Would you agree that not allowing real losses to be claimed against real gains introduces a distortion into the tax system that doesn't currently exist?
So obviously the arrangements is to look at taxing the real gain, and that'll actually help improve decision making compared to a system based on the uniform discount. Now the proposed approach, like you mentioned, the approach to losses, well, that's the same approach that applied for over 15 years underneath the when capital gains are first introduced in Australia. And that's at a time as well when inflation was higher, and so the impacts are probably sensitive to inflation. One of the reasons behind that, it's a trade-off. Tax reform and tax policy is always to do with trade-offs. There's trade-offs between efficiency, equity, simplicity, and also to ensuring the integrity of the system. And the rationale for using nominal losses is to preserve that integrity of the tax system. And that's consistent with other countries that have adopted similar arrangements on the taxation of real gains. One of the challenges with a realisation-based system is that the individual gets to choose when the tax is paid, or when a gain or a loss is actually crystallised. They can sell the asset when it's in a loss position, offset it against a gain somewhere else, and then purchase the asset back straight away. And that can actually lead to deferral of tax liability for some time. And so it's a choice between what might be the theoretically optimal system and a system that preserves the integrity of the system. In addition, because we do have choice on realisation, it can also affect the portfolio choice. So moving to a system that does have real gains can also affect the portfolio choice of the individual as well. So now, in terms of where this has been done before, the UK, they did temporarily allow real losses to be deductible, but they reversed their approach, largely reflecting integrity concerns.
It's pretty complicated. Oh, that's good. Because I don't know if we're necessarily getting anywhere. I mean, it's pretty complicated though, isn't it? Like this lovely document here that Treasury came up with tries to make it look, very straightforward, but it's very difficult to put a number on exactly what the impact of these CGT changes are going to be relative to, an individual's portfolios. No wonder Australians are confused, I guess is what I'm saying.
The arrangement for losses are consistent with the arrangements that have applied before.
Okay. I'll move the call on there, Chair.
And sorry, before you start, there's a number of new senators joining for the first time today, which is fantastic. We're just doing 10 minutes. I'm just going to rotate. There's a lot of interest, and I'll give you an 8-minute warning. Yeah, I know. And look at the crowd at the back. Yeah.
I have some questions to the ACNC. Thank you, Commissioner. How does the ACNC assess whether a charity operating primarily outside of Australia meets the public benefit requirement under Australian charity law?
Sue Woodward, Commissioner, Australian Charities and Not-for-Profits Commission. Senator, as you've identified, if a charity has activities, and that can include sending funds overseas, then under the ACNC framework there are external conduct rules that apply, and meeting those rules is a condition of retaining charity registration.
Yeah. But how do you assess whether or not an entity is meeting those rules in a foreign jurisdiction? Do you undertake a review of their activities? How do you assess that?
As we do with any charity's compliance with the ACNC Act, it's a combination. So there are annual reporting obligations which would report on overseas activities, for example, which would be relevant information when we're risk assessing where we should put our resources. We also receive intelligence from a range of places. Concerns are recorded with us. We work with other agencies, for example, AUSTRAC and the intelligence agencies. So if there is considered to be a particular risk about any activities of a particular charity, that would be part of how we would decide where to put our resources.
Well, has the ACNC reviewed the Jewish National Fund's activities in relation to land acquisition and development in the occupied Palestinian territories? And if so, did you reach any conclusions?
Senator, with the secrecy provisions we have, we don't comment publicly on whether we're investigating any particular charity or not. So I can't speak about that particular charity.
Well, then perhaps instead of speaking about a charity, does the ACNC consider whether or not funding directed to Israeli settlements in the occupied West Bank, which is illegal under international law, which has been condemned by our government, would that be considered to be compatible with charitable purposes under Australian law?
If funds are being used in a way that amounts to a disqualifying purpose, then that would be a reason for removing the charity status. If it is a breach of international law, the governance standards that we have are around the compliance with Australian laws, so there can be international laws that are not adopted as part of our domestic laws.
The example of that there aren't clear Australian laws prohibiting people from expropriating Palestinian property and building Israeli settlements in the occupied West Bank. And so are you saying, even though that's in gross breach of international law, even though it's contrary to the Australian government's policy position, unless there is a distinct breach of Australian laws, it wouldn't be disqualifying?
Yes, Senator. I might call forward my Assistant Commissioner, because it is quite a nuanced point, so I will call forward my Assistant Commissioner to make sure I've stated that for you accurately.
And Commissioner, to be clear, you administer the laws you're given. I'm not holding you accountable for the laws, but it would. What is the ACNC's position on this?
Kate Bennett, Assistant Commissioner, General Counsel on Regulatory Services for the ACNC. Senator, as the Commissioner outlined, the governance standards in the ACNC Act apply to domestic law. So if international law hasn't been ratified into domestic law, then generally speaking, there won't be a breach of the ACNC Act. However, the Commissioner also mentioned disqualifying purposes. Mm-hmm. It is a very tricky area of law. It is possible that some actions that may not be unlawful could form a disqualifying purpose.
What are disqualifying purposes then for the purposes of the Act? Sorry to
just refer to the legislation, so I give you the exact definition. A disqualifying purpose means the purpose of engaging in or promoting activities that are unlawful or contrary to public policy. Public policy includes the rule of law and the constitutional system of government of the Commonwealth, as well as the safety of the general public under national security concerns.
Well, so if an activity has been condemned by the Australian government, if it's contrary to international law, are you saying you couldn't tell whether or not it would be defined as contrary to public policy? I mean, I would have thought funding illegal settlements on an occupied people's land would be contrary to public policy. Could I ask you to take that on notice? And because it is not a simple question, I accept that given what you've just put. Could I ask you to take that on notice and provide a considered response?
You can.
Thank you. Could I ask you about secrecy laws? I note that December 2025 amendments were made, specifically allowing disclosure where there is, I think the test is significant harm to public trust and confidence in the Australian not-for-profit sector. Have you disclosed any of your current investigations since those laws were put in place?
Yes, Senator, you were right. At the end of last year, there were amendments made. It is of limited circumstances when we do have that exception. And the reference you made, there's two types of disclosure. One is called a limited disclosure, where we just say whether we're investigating or not. And one element where that is possible, as you mentioned, is where there could be significant harm to public trust and confidence in the not-for-profit sector. There is another provision that is called a general disclosure, where we can say more about why we are investigating. That has a lot, it doesn't have that public trust and confidence test. but it is similarly based around where there is significant harm to the public or an individual.
Have you used those powers?
That was the last part of your question. We have, in one example, made the limited disclosure that we are investigating a particular charity that was, as is required, published on our website earlier this year.
Yeah, I understand, and I have this understanding. I'm grateful for the research done by journalists associated with Michael West. That between 21, that between 7 October 2023 and 31 December 2025, almost 900 concerns relating to 88 charities in connection with the Israel-Gaza conflict were received by the ACNC. Can you validate whether or not that data is right? Do you have other data that could update that?
I would have to take on notice the data used in that article. That's not typically how we report it, and it's about particular charities. So I would need to be sure to take that on notice.
Have you considered? Thank you, Chair. Have you considered whether or not you would use any of those new disclosure laws to indicate whether or not investigations have been commenced, or there is a systemic concern to the not-for-profit sector, given it would appear the wave of complaints?
The provisions with the exemptions are not retrospective, so that is actually probably in this context an important factor to note. If there was a new investigation that met the criteria, we may disclose it. One thing I would just add as background there is that sometimes in these very serious matters we might be working with other investigative agencies, and as part of our collaboration with them, if they have concerns about us making an investigation public, if it could jeopardise their investigations, then that would obviously be a determining factor in whether we would announce that. But perhaps particularly in reference to what you're referring to, this provision wasn't retrospective.
All right. Could you, I think you've taken on notice, any data that you can give in relation to that?
Yes, Senator.
And my final questions in the 10 minutes remaining to me are in relation to basic religious charity reforms. They were recommended by the Productivity Commissioner in May 2024. Have you been working with the government on progressing those reforms?
The government policy around basic religious charities is a matter for government and the Treasury portfolio.
Well, I may ask the Minister just very briefly at the end. You've previously publicly confirmed investigations into the Mormon Church and Hillsong. I have many constituents asking me whether or not there are investigations into a variety of other entities, but the ones that have kept coming back to me time after time after time are the Casey City Church and the Melkite Church. Deeply concerning issues raised with my office. Have you got investigations into either of those entities?
Senator, I can't answer that question because of the secrecy provisions, and I would reiterate the general comment that I made that these provisions relate to investigations that we would commence after they came into operation. And by not commenting one way or the other doesn't mean that we're not investigating. I'm just not
I understand,
commenting.
Commissioner. Minister, do you have an update on where you're up to with the reforms?
Happy to take that on notice, Senator Shoebridge.
Thank you.
Thank you. Senator Chandler.
Thank you very much, Chair. I just want to go back to the CGT changes, and we might touch on the here as well, and perhaps take a step up from the detail that we were getting down into earlier. So, zero cost base small businesses. Will a business with zero cost base, owner of this business is in the top bracket with no concessions, under these changes, are they going to face a 47% tax rate on sale?
So, Senator, most small businesses are eligible for small business CGT concessions, and under those concessions, they can pay no CGT, or they can also get a 50% discount. There's a range of concessions, which means that a lot of small businesses are eligible for a much reduced capital gain tax.
I'll come to those, the impact of that in a second, but sorry, with a business with zero a business with zero cost base, but their owner is in the top bracket with no concessions, will they face the 47%?
Well, I think it's a bit difficult for Treasury to give you an answer on a hypothetical situation without... I mean, there's a range of things that impact, you know, for example, the 4 different concessions that are available to small business continue.
But I don't think what I've just described is necessarily that hypothetical, Minister. I think there would be
it is hard to
many
know without
businesses that would be in that situation.
There's a whole range of things: how long the business has been held for, what's the turnover, a whole range of things that would impact on the answer to that question. So, as Ms Brown has outlined to the committee, there are a range of small business concessions that already exist, and none of those have been changed in the reforms that we have outlined.
Okay, let's go to the small business concessions. Like, doesn't that discourage businesses from growing above the exemption threshold if they're going to need to rely on using those small business concessions in order to avoid paying these new taxes?
So I think the government is consulting on some of those issues. If I can go to the tax explainer.
Treasury hasn't done any modelling to try and get a sense of what the quantum of the issues before the government starts consulting?
So I think the number of businesses that have turnover less than 2 million is in excess of 90%.
So around, we think that around 90% of small businesses would be eligible for the small business CGT concessions based on the turnover tests.
That didn't answer my question, though. Won't the fact that small businesses have to rely on getting these concessions disincentivise them growing their businesses?
Well, I mean, I think there's probably a range of factors around decisions small business makes. I would think the vast majority of small business would want to grow their business, Senator Chandler.
I'd like to think so too, but I'm not convinced they do under these changes.
Reforms to CGT would, prevent a small business wanting to grow.
I don't think that's what the small business community is saying at the moment, Minister.
Well, we have a range of concessions available. The government has also indicated in the budget papers on budget night that we were wanting to engage on the implementation of this and some of the impacts on this in a range of different ways with businesses, and we are doing just that, and we will continue to do that.
Okay, higher productivity businesses, they're going to get taxed more, aren't they? Because in contrast to the existing flat discount, any part of the return above inflation is going to be taxed at the full marginal tax rate, which means the higher the return, the higher the effective tax rate. Is that correct?
So even a high productivity business that is eligible for the small business concessions will also have the opportunity to have their capital gains exempt or taxed at 50%. There are 2 exemption categories and also a 50% discount category as well. And they'll still be at a high productivity.
What if they're not eligible for those concessions, though, Dr Johnson? Let's just say for a moment we're talking about bigger than...
Then it would depend on the particular circumstances of the business, that, how much has been reinvested, the amount that's been invested into the business that would adjust the cost base and a range of other factors.
So relative to the existing system, though, that's going to place a greater tax burden on more productive investments and a lower tax burden on less productive investments. Is that correct?
No, that's not necessarily correct. I mean, what it does is it provides a more neutral treatment in relation to the real return, which is important for investment decisions. The current arrangements will incentivise more speculative type investments, so investments that may not actually link to the fundamentals, and so that's one of the reasons for for looking at this type of change. So the current discount-based approach provides a inappropriately overcompensates some types of investments, undercompensates others, and what that tends to lead to is investments, or promotes investments in more speculative type behaviour as opposed to the basic fundamentals.
The definition of what a small business isn't consistent across government. That's correct, isn't it?
That's correct.
That's correct.
So can we actually say, in relation to these, the exemptions that businesses would have, small businesses, and I use that term loosely, not in relation to any of the many definitions, the exemptions that these businesses are going to have to utilise, is there one consistent way of figuring out exactly how many small businesses are going to have to utilise them?
Sorry, what's your question?
So we can't say that all small businesses are eligible for these exemptions, can we? Because
I think
because
it's a
what
very,
a small business is varies.
That's right. So we've been clear. I mean, the definition for the small business concessions would cover, as I understand it, about 91.5% of Australia's 2.7 million businesses.
So how do you get to that 91% based on what definition of small business? Sorry,
Well, that is a aggregated annual turnover of less than 2 million,
Okay.
or assets with a net value of less than 6 million can access the capital gains tax concessions. And as of June 2025, I'm advised that of the approximately 2.7 million businesses, it's roughly 8.5% would not be covered by the existing small business CGT concessions based on turnover. That's how I get to that.
Okay. Can I just go back to the 47% for a second? I mean, it will not shock you to know that I didn't make that number up. I've seen it in my social media feed consistently since budget night. There's an amusing meme going around showing the Prime Minister as
Yes,
a 47%.
but it's not accurate, is it?
Well, so have you asked Treasury for advice on whether it's accurate, Minister? Because I tried to get an answer from them just now and they didn't.
Well, as I understand it, some of that is based on misinformation, which is that we are removing the CGT discount. We're not doing that. We are reforming it.
Have you asked Treasury to do any modelling on whether the 47% is accurate?
It's not accurate, Senator.
You're at 8 minutes.
Okay. Sorry, I just have a few more questions on CGT. So the government has claimed that CGT changes must be applied to all assets because carving out housing would create a distortion. And that was claimed to be on the basis of Treasury advice. What was that advice?
So, in terms of the application to all assets, it comes from a number of factors. So, first of all, there is limited justification for having different regimes applying across different asset classes where possible. So you may want to have some separate arrangements where you can identify that there might be some kind of positive externality or some positive spillover, and you might want to have some type of arrangement to support that. And I think the government's indicated that they will consult with kind of startups and others. That was in the budget. But to have broad-based there's limited rationale to have a broad-based discount. We kind of, we've shown that in budget statement 4. Then there's also limited rationale to have different arrangements across broad asset classes as well. That will also tend to distort investment or savings behaviour as well. In addition, when having distortion, when or having different arrangements across different types of asset classes, it can create significant opportunities for tax arbitrage and restructuring to try and get around the original or the other intents of the policy. And so moving towards a comprehensive approach makes sense on an efficiency basis, but also on a tax system integrity basis as well.
Sure, but if that's the case, Dr. Johnson, then why have we carved houses out from the negative gearing changes? Sorry, why are we carving houses out with the negative gearing changes?
The new builds.
Do you mean new builds?
And not on other assets?
Do you mean for new builds?
Yeah. Sorry. So why are we applying them to one asset type and not the other? Is what I'm getting at.
Yeah. So like I mentioned, that sometimes you may want to. There might be rationales where there is a positive spillover or positive benefit, and the government has indicated that having investment in new builds is important and has carved and ensured that they can continue with the existing treatment.
So incentivise new supply.
Yeah.
And Senator, I might draw your attention to other measures in the budget that also have that same effect of creating distortion, but for an intended purpose. So the changes to the losses reforms that the government is doing is to support small businesses and slightly larger businesses with innovation. The changes to R&D tax incentives are about encouraging R&D, but that means someone is getting a bigger deduction than they otherwise would be. So there's a range of measures that might have those exemptions, but you do it in a very targeted and considered way, which means that you're minimising the distortion that it is creating.
But you can negatively gear shares, can't you? You can borrow to buy that asset.
You can, and so currently, I think it's about 98% of negative gearing it relates to property.
Established property.
But I'm just asking about the principle, though, I guess. So why can shares continue to be negatively geared, but existing houses can't?
So, like I said, the majority of negative gearing takes place through property. When we look at the distortions that are kind of come about from the existing system, a large part is in relation to the application of the capital gains tax discount as a proxy for inflation doesn't quite do the job. So having removing that and replacing with indexation moves us to an arrangement where it's more likely that decisions will be based on the underlying economics of the investment as opposed to tax preferences. In relation to negative gearing, it's a smaller issue in relation to shares. It's like I said, there's very few people. Only about 2% is of negative gearing comes from things outside of property. So it's a much smaller problem.
Oh, just one more question here. Just while I flip that around for you, then, Dr. Johnson, if it's such a good idea, why couldn't you carve out shares from the CGT changes as well?
What would be the rationale for carving shares out of the CGT changes?
Well, I guess, okay, that would be a question for you, but...
Well, I mean, so I think I answered that before when I indicated that, it's important to have neutrality across asset classes in the tax system. If we don't do that, then we're going to have, it relates to two issues. One, you're going to have a bias towards investing through particular types of investments, and you kind of distort the asset allocation through that way. Alternatively, it really does put pressure on tax minimisation and arbitrage. Individuals will restructure to benefit from tax concessions. We see it quite frequently throughout the tax system. So I think on two cases, having a more uniform, consistent approach across assets supports better economic efficiency.
But it's not consistent.
But it is. The CGT arrangements are consistent.
Not with the negative gearing changes, they're not?
The negative gearing change, like I said, very few people use negative gearing for shares.
Okay. 98% in established property.
There's features of negative gearing of share that make it less attractive than negative gearing of property. Usually because...
less attractive?
Less attractive, usually because the security is not as good as security of a house.
Oh, sorry, you mean
banks
less
will charge
attractive
more
as an
interest.
investment option. Yeah. Okay. Thank you, Chair.
Senator Bell?
So I've got some questions about the CGT changes as well, specifically about whether sort of everyday Australians can actually be reasonably expected to comply with new laws without needing a tax agent or a paid software or a forensic reconstruction of, say, every dividend reinvestment parcel they may have accumulated over 10, 15 or 20 years. Because a taxpayer with a dividend reinvestment plan doesn't just own one parcel of shares. Every reinvestment dividend can create another acquisition parcel. So over time, a modest portfolio can become hundreds of separate records. So I think Australians deserve to know whether this matter was modelled. The Treasury looked at the paperwork burden, whether ATO is able to administer it simply, and if the government actually understands what it might cost everyday investors to comply. So the question I have first is, did the Treasury model the additional compliance burden on individual taxpayers of replacing the 50% CGT discount with a cost-based indexation?
So, Senator, the department did prepare an impact assessment, and as part of that you do look at the compliance costs. That impact assessment is published on the Office of Impact Analysis website, and that does show that there is a compliance cost associated with the changes.
And what is that compliance cost?
That compliance cost is a total, sorry, I'm just trying to make sure I get the right number, 88.4 million average annual regulatory costs.
Right. And then, so for a taxpayer holding 20 listed shares with 2 dividend reinvestments per year over 15 years, how many calculations would that taxpayer, how many do they need to perform?
So it would depend how often they realise the asset. Capital gains is only applicable when you realise the share.
Beg your pardon, sorry, I'm having trouble hearing you.
Sorry, so they have 20 shares. It depends on how often they trade in the shares, because capital gains is only liable upon realisation of the shares.
Mm-hmm.
And so a lot of people will hold shares and not trade for long periods of time.
So what if they decided to realise them
Just
all?
under the current arrangements, you need to keep track of your cost base for your assets so you can work out your capital gain, and that does not change.
So you're saying that, so say under the new system,
Yep.
If a taxpayer realised all of those shares, they're not going to be required to make any additional calculations?
No, so they'll still need to understand their original cost base and their sale price. The difference here is then you'll make a calculation to provide an uplift on the cost base for inflation. To be able to do that, the ATO will have software or have tools and things available to make it easier.
Right, but so if we're using that example, say 20 listed shares, 2 dividend reinvestments per 15 years, they decide to realise them all same time, how many calculations are they likely to need to perform?
Well, it's the same number of calculations as now, because they still
what would that be?
I'm not sure, sorry.
I don't know that Treasury can do this on the spot based on a scenario that's just given to them. What they're saying is it's the same arrangements that exist now.
So could you take that on notice, my question there, that scenario?
Yep, sure.
And so, I mean, under the original system, under that scenario, and then under the proposed changes, could you provide the answer on notice? Thank you.
Yep.
And so that modelling and that impact statement you provided, does that include, did the Treasury provide to the government the cost of compliance with this reform, including additional accountant fees and tax software costs that are likely to be incurred?
So the compliance costs consider a range of factors. Just trying to... That included the costs both to the taxpayer as well as the cost to their advisor. And so the cost to their advisor in learning about the new skills and advising their clients, the new record keeping they might need to do, and the new procedures they might need to put in place.
And what was the cost of that?
So we've only got an aggregate. I've only got an aggregate number available to me tonight, Senator.
And what is that aggregate number?
Oh, that was the 88.4.
That's the same. Is that the same one?
Yeah.
Okay. And did the Treasury advise the government that this reform could increase compliance costs for investors? And if so, was that advice provided before the policy was announced?
So it's ordinarily to provide this type of advice as part of budget processes?
Yeah. So the government was well briefed by Treasury before we make these decisions, and in addition to the ones that you're raising, the budget also has a range of tax simplification reforms in the budget, including instant deduction, instant asset write-off, removing nuisance tariffs, and to reduce compliance costs. So there's you have to see it in totality with a whole range of other measures that the government has agreed with.
All right. And then in relation to the ATO, under the proposed system, will a taxpayer need to calculate an index cost base for each relevant acquisition parcel? In the case of dividend reinvestment plans, will each reinvested dividend generally create a separate acquisition parcel? Do we know?
Senator, the final shape of the legislation and what's actually going to be required is yet to be determined. So until such time as we see the specifics of whether the Parliament ends up with the legislation, it's probably unwise to speculate in the meantime. And also, given the sort of inherent uncertainties that might, at the moment, be the case, we're not sure what shape the final legislation will take.
What are those inherent uncertainties?
Well, the Parliament might make some amendment to what's currently been proposed, and so in the ATO, we always try to be constructive to try and provide, obviously work with our colleagues in the Treasury, to provide as much sort of in-time advice we can to assist them in their policy deliberations and advice to the government. But when it comes to providing, if I provided a view here, that could be then taken out of context. So the Commissioner has said that this will be the case, but until such time as the legislation is final, we by us providing what could be taken as a definitive advice would be a bit premature.
So you can't say whether you require taxpayers to maintain or reconstruct parcel level records.
Taxpayers will have to keep records, and they will
like they do now.
As Dr. Johnson said before, the requirements now to keep records to establish what the capital gain might be when that asset is realised. That principle stays the same. So at the moment, people need to keep records about the value of their asset, and upon realisation, then work out the capital gain. And of course, bearing in mind it's a self-assessment system, so they're the ones doing it. If the way the capital gain is to be taxed changes, which is what the proposal is, then the principle about what they need to keep, the records they need to keep, remains the same. What will change is the resulting tax that will be payable.
But the actual act of then, there'll be an additional, as you model, there'll be an additional compliance cost for individuals. It's likely to become more complex for them.
Well, I don't necessarily understand why. And as I think Ms Brown said, we will, at the tax office, we will make sure that we work closely with agents and the digital service providers and of course our own staff to make sure there is guidance, materials, tools for taxpayers who are going to do this themselves and not through an agent, to make that the task of complying with the legislation as straightforward and as low cost as possible. That's what we aim to do across all areas of tax, but particularly those where it's more likely an individual or a small business who, in the scheme of things, are usually probably sometimes less able to afford the external advice. We'll attempt to make sure that is as smooth and as seamless and as clear as possible.
And have you already begun developing those free tools? Or
in the discussion with our colleagues in the Treasury, we're certainly scoping out what things might look like. But as I say, a lot will depend on the final shape.
Okay, but so you've already looked at how some of these tools, what they might look like?
Well, without wanting to pretend there are going to be new tools, we actually have a whole range of tools. I think sometimes the common term is artefact, not a thing that you dig out of a cave, but things that people can use to assist them in understanding their obligations and their payment.
So can you guarantee that a sort of individual investor, an everyday investor with a long-running DRP would be able to comply accurately without having to pay for tax software or additional accountant fees?
Guarantees about the future are probably a fraction unwise. But I think the future is inherently uncertain, so I wouldn't like to have a guarantee here that and people find in the future there's one particular circumstance where someone had to do something different to otherwise do. So I wouldn't like to be in a position of trying to guarantee, but I can give the committee the assurance that that we will do everything that we can to ensure the legislation, when it's passed, everything we can to make sure the obligations on taxpayers will be as clearly understood and as straightforward as we're able to make it.
It does sound like you believe there's going to be it's going to impose a private compliance cost, like an increased private compliance cost on taxpayers.
Well, I think as Dr. Johnson talked, as Dr. Johnson said before, the question about the increase, I think, is probably what we'll have to just see how it works through, because what a taxpayer, say an individual taxpayer, will have to do in terms of keeping information and then establishing what needs to be paid upon realisation of the asset. I mean, that work needs to be done now. So I think what we're talking about is the amount of tax that's going to be paid rather than the record keeping of the asset's value.
Thank you. Senator Chandler.
Thank you very much, Chair. So back on the CGT, and then we'll do a quick few more on negative gearing, then I think I'll be done for the evening. So the minimum 30% tax rate, won't that hit the lowest income Australians the hardest?
Yeah, so I'll just... In the tax explainer, I'll just try and find that. We do talk about exemptions for low, for certain income
I know there are
recipients.
exemptions for people receiving welfare, that's correct?
Mm-hmm. On payments, yep.
Yeah, that's right. So individuals on payments, the minimum 30% wouldn't apply. As we outlined in budget statement 4, we looked at 22-23, and around 95% of the net capital gains that would have been earned by people 95% of gains were earned by individuals who either wouldn't be affected by the minimum tax or who would have had a marginal tax rate of more than 30% during their working lives.
So what about self-funded retirees or Australians that are taking time out of the workforce, women on maternity leave comes to mind? Aren't they going to be worse off?
It would depend on their individual circumstances.
They're still going to have to pay the 30% minimum,
in the
aren't they?
situation where they realise a gain, and
Yeah.
is this what you're saying?
Yeah.
So in that situation, well, you just heard evidence that, like, for the overwhelming majority of taxpayers, 95%
Of capital gains, yeah, of capital gains.
In terms of capital gains, would not be. Sorry, I don't want to verbal. Dr. Johnson.
So around 95% of capital gains, they would have been earned by people who are not affected by the minimum tax. So, for example, they are on income support, or they're already facing marginal tax rates that are at 30% or above, or they would have faced a marginal tax rate of at least 30% in their through their working life.
So anyone with a welfare payment, receiving a welfare payment,
Income
I should
support,
say, is
yeah.
carved out. So they are going to be paying less CGT than someone who's earning less income than them but without a welfare payment. That doesn't seem quite fair.
So it would. So again, like when we looked at individuals, a lot of those individuals who would be subject to the 30% rate will be individuals who were higher income individuals during their working lives, And so this is around this. What this aims to do is to try and have a reduce incentives to hold on to assets for too long, to wait until you are facing lower tax rates.
Sorry, I don't know if that answered my question, because I thought it was more straightforward than that. If you're on a welfare payment, you are carved out, so you won't have to pay the minimum 30% tax rate if you realise a capital gain. But a self-funded retiree, someone taking time out from the workforce, they are going to get hit with the 30%.
It would depend on their circumstances.
Yeah. I mean, it's very difficult to give individual tax advice on hypothetical situations that don't bring all of the information to the table. I mean, it is impossible for Treasury to sit here and just say someone who might be a self-funded retiree without knowing anything else about the situation they're in or the decisions that they've taken or that the assets they're disposing of.
I just would have thought that these aren't completely obsolete groups of Australians that I'm talking about. I would have thought Treasury would have done some sort of analysis on the impact of these kinds of groups.
They have, and they're explaining that to you.
But they can't...
Well, they can't give individual advice on an individual hypothetical situation that has half the information, or less than half, i.e. just a self-funded retiree. But nothing else.
Okay.
I mean, they cannot give advice on that.
I would have thought these were pretty straightforward questions, but I'll persevere. On the negative gearing changes, these have been purported to improve the efficiency of the housing market, but what impact do the grandfathering provisions have on that? I would have thought that would have more of a lock-in effect than anything else.
Well, I think the Secretary went through this earlier today in a question from Senator McKim. It might have been the Secretary, or I think, when you asked about the turnover, and that her advice was, I think, in most situations a property moves from negative gearing to positive gearing within 6 to 7 years. That's outlined in the budget papers. We believe this is the right decision to take, and like already over the last couple of weekends since the budget, I think we have been seeing promising signs of first home buyers being able to compete to purchase a property, not necessarily outbid by investors.
So has there been any analysis on whether people who are grandfathered will be keeping their houses rather than turning them over to the market?
Well, I think the evidence is, again, that they shift from being negatively geared to being positively geared, and so some of the benefits that come with being negatively geared are lost over time. Now, the government has taken a decision in terms of our tax reform that investment decisions made prior to budget night are protected by the decisions we've made. We think that was the right decision, and that has resulted in grandfathering arrangements for those that have investments that operated before budget night. For those that operate before budget night in the 1st of July 2027, negative gearing applies for that year, for that period, before the new arrangements kick in. Subject to legislation passing, of course.
Thank you, Chair. The exemption for new houses, I mean, do we also run the risk that disincentivises selling them as well? Aren't you concerned this will lock young Australians out of homes?
In terms of, well, we think it incentivises investment into new supply, which is something that we are, as you know, as a government, very focused on. And
but does it then disincentivise turning those houses over?
Well, the same arrangements would apply.
I don't think so. So one of the role of the minimum of the 30 is to actually remove that lock-in, mitigate that lock-in effect. because suddenly their personal income tax rates won't influence when they sell. They can sell and they can buy a new supply, new house, and continue that investment in the same CGT treatment with a new build. So repurchase from the proceeds a further new build.
Is that my time, Chair? Okay.
Okay, Senator Kim, who I believe is sharing your 10 minutes with Conscience.
So I'll kick us off. I want to go back to the discussion on PWRT we were having earlier this evening. So firstly, starting with the ATO. So just so I'm clear, so many companies, many projects have never paid PWRT. Some have paid some amounts of PWRT. But when a gas company decommissions a project, if it has paid PWRT on that project, it gets its deductions, the costs of the decommissioning, back from the ATO as a cash payment. Is that right? Capped at the level of PWRT that it's paid. Is that fair?
Well, it's a deduction in the calculation, and in a year where it has net deductions, it has previously paid PWRT under that ownership, there is the potential for refund of previously paid PWRT.
As cash?
As cash.
Yep. Do we pay interest on the loan that they're giving us?
We do not pay interest on that loan, Senator.
Okay, because that's what we're talking about.
The tax office is not.
It's not so much tax, Minister, is it, that many gas projects are paying under PWRT arrangements? It's a short-term loan to the government because they get it back as cash from the ATO when they decommission their project.
If maybe
Minister.
Mr. Robinson's joined the table.
Oh, well, that's nice. I was just asking the Minister because I'm straying into opinion here, I fear, and I don't think it's fair to ask you.
Well, let's have some advice from the experts first.
So if Mr. Robertson can just elaborate a bit more on the way the PRRT works and the purpose of the decommissioning refund.
Senator Marty Robinson, First Assistant Secretary, Corporate and International Tax Division. As Mr. Hirschhorn sort of indicated broadly earlier, the reason the decommissioning expenses are generally refunded under the PRRT at the end of the project is because that's the point at which the project has ceased deriving income. Yeah. But if you look at the life cycle of a project and the various costs that business incurs through the exploration, construction of infrastructure to support
they're
extraction.
All deductions as well.
That's all deductible.
That's right. With a carry forward and a very generous uplift provision, I might add.
That's right, Senator. And the point being that it's important that the decommissioning work is undertaken at the end of the project. It's obviously the point at which things like environmental remediation occurs at the end of the project as well. And those are legitimate deductible costs against the PRRT. The other thing I would add, Senator, is that when the entity receives the refund for those decommissioning expenses, that is also treated as income for corporate income tax purposes, and so they would actually pay additional tax on the amounts that are being credited.
All right, thanks. So when the budget shows revenue from the PRRT, does that factor in expected decommissioning costs?
Yes, it does. Yes, we do.
It does?
Yep.
All right. So do you have visibility or data on how much PRRT each project is expected to pay or has paid, and what the expected decommissioning costs for those projects are, for each project?
We don't have one of company or project by project, but so yeah, because of taxpayer confidentiality, we can't actually provide information on those specific projects. I think the ATO had a response to a question on notice before that talked about publicly available information.
Do you have that data though?
So I'll have to take that on notice and check to see if we actually have that data.
All right. So back to the ATO, how much cash, if any, has the ATO handed back to which companies for which projects over what timeframes?
Yeah. So, Senator, I'll just maybe to expand on Dr. Johnson's answer to the previous question. So the ATO, of course, has information on what has happened whereas the projections, we do not do projections of the life cycle of projects. And again, I probably have referred in the past, the Callaghan Review is probably the most complete projection of projects. We do disclose each year the PWR, under the corporate tax transparency measure, the PWRT paid by companies. I'll put a caveat on it and take it on notice, but I think that would also disclose if we gave cash refunds. And so to the best of my knowledge on the table, although I will take it on notice, I do not think we have paid any project a cash refund.
All right, and
to date.
Okay, thank you. But you expect to in the future?
Senator, it is possible in the last year of a project, or as it ceases production and moves into decommissioning, a feature of a super profits tax is that it works out the super profit over the life cycle. The government will have over-collected the super profits on the way and will have to then refund the extent to which the super profit has been overstated. So one would expect that at the end of any particular project, there will be a little bit of the PWRT paid back.
Potentially quite a bit. I mean, NOPSEMA estimates $66 billion in decommissioning costs for offshore oil and gas by 2070, with about 55% of that cost being incurred by 2040. I mean, these are big bickies here we're talking about, big costs, and therefore potentially big cash refunds.
Well, presumably you want these operations decommissioned
I'd like the gas
properly.
companies to actually pay for the gas that they're making eye-watering profits
they don't only pay PRRT,
and my colleagues
Senator
would
McKim.
like that too.
They don't only pay PRRT.
I'm not talking about company tax. Everyone pays company tax.
Presumably you would like these operations decommissioned appropriately as well,
really
or do you want the budget to pay, the government to pay for that?
Of course they should be decommissioned.
Right,
Can I ask,
okay.
when Treasury said you factor in decommissioning costs when you book the revenue when you book the revenue from PWRT in the budget, do you rely on the company's estimations for decommissioning costs, or do you conduct your own work, or do you get someone like NOPSEMA to do it? Because the companies, in my view, are grossly underestimating their decommissioning costs in their annual reports because it makes their balance sheets look better.
So decommissioning costs, one of the challenges with decommissioning costs is that they are lumpy and they can occur at any time. What we do is we have our own assumptions around decommissioning costs that we use that we adopt. We try and provide an accurate reflection on what we think the decommissioning cost would be on average over the forecast per horizon.
Do what the companies put in their annual reports influence your estimations at all?
We will look at a range of sources.
Including those?
So we will look at those. We'll talk to the Department of Industry.
Just urge you to take them with a grain of salt, Dr Johnson. I mean, my last question before I go to Senator Hodgins-May is for you, Minister, and it's this. Pubs don't get the beer they sell for free. All right. Builders don't get the bricks they use to build houses for free. Why do gas corporations who are making eye-watering profits get, in so many cases, the gas that they are using to underpin those profits for free?
Well, I think you're coming... yes, well, OK. In the interest of the evening running smoothly, I would just remind the Senate that PRRT is one of the revenue lines that the companies that you are raising pay in terms of revenue to government. I would also presume that you would like these operations decommissioned appropriately at the right time. PRRT and the decommissioning arrangements have been a long-standing feature of that particular tax line.
You finished?
Yep.
Thank you. Look, I'm picking up that line of questioning from my colleague Senator McKim, given that this is such a huge issue of national importance, and I don't need to tell you that. I'm sure your social media and your email inboxes are telling you how many Australians are, I think, rightly pissed off about the current tax settings around our gas exports. And I just want to make sure that I'm getting this right. So multinational gas corporations are allowed to claim their upfront costs against the tax they're supposed to pay on the Australian gas, meaning that they can go for years and years without paying any PRRT at all, which we heard Shell paid none in over a decade, Santos. Then at the end of the project's life, after they have made billions of dollars exporting Australians' gas, they have to decommission the project. So clean up,
well,
remove
presumably
the gas
you want that to happen too,
no,
Senator Hodgins-May. Sorry to interrupt your... sorry to interrupt your speech,
if you're sorry, then you'll stop.
What?
And they actually use those clean-up costs to wipe their tax bill as well. So, of course we want it cleaned up, but why should taxpayers have to foot the bill?
That's not right.
That's what you said.
That would be right if PRRT was the only tax being paid. There are arrangements for decommissioning, which I would have presumed the Green political party would support.
You're being disingenuous, Minister.
No, I'm not being disingenuous.
Because I am giving you... cleaned up, and what I've said is that taxpayers should...
I'm not being disingenuous. I'm just stating the real facts here, which, is an inconvenient truth to the Greens political party. But in our first term, we made changes to the PRRT so that offshore gas companies pay more tax sooner, and this was around ensuring there was a fairer return to the Australian people from the resources they own, by also ensuring Australia remains a reliable trade and investment partner. We also know that ATO data shows oil and gas companies paid about $12 billion in PRRT and company tax in 23-24, and the broader mining industry accounts for 39% of the total company tax in 22-23. So I think I understand the point you're making. I would have presumed the Greens political party would want those operations
to be paid for by the gas corporation,
be
not by the taxpayers.
Decommissioned appropriately in the environment interest.
We're at like 12
as you've heard tonight, anything that was recouped through the PRRT is counted as income for the purposes of company tax.
So can I just can I clarify, what about the costs of cleaning up leaks or environmental contamination? Is that something that also that these gas corporations can go and deduct, another loophole from the buffet of tax loopholes available to them?
Well, I'm not sure that's covered by the PRRT, but there would be other laws that would govern arrangements around those kind of situations that would incur requirements around clean-up and penalties.
Yeah.
I don't think it relates to the PRRT, though.
It's just astonishing that what we have heard tonight is that gas companies can use their final clean-up bill to wipe the tax they owe and potentially receive a cash... No, let me finish, please. No.
Because
you just said that, and receive a cash payment at the end.
We've been through this. I understand the point you're making. You chaired a select committee inquiry that looked at this.
Correct.
We had extensive information and evidence provided through that. So I understand what you're trying to do tonight. I'm trying to put all of the facts on the table, and I understand they don't align with the Greens political party's political interests.
It's political choices, Minister.
There are PRRT, there are company tax payments, and there are other payments that are paid to state and territory jurisdictions under royalty arrangements. So I think it is very disingenuous to say that PRRT is the only form of taxation on these operations.
It's not what I said. And I've heard these gas corporation talking points many times, and you've repeated them again tonight. I've got one more minute, do I?
No, it's 9:15 now. We need to suspend for a break, and your question block is finished. So you can come back after we've rotated. I did give fair warning. So we will suspend now and resume at 9:30.
Thank you.
So we will continue now with representatives of Treasury, Revenue, Small Business and Law Group, the ACNC, the ATO and the Tax Practitioners Board. I'll go to Senator Bragg.
Thanks very much for being there. Just have a couple of follow-up questions on the CGT and then some questions on housing. So in the budget, there's a couple of explainers about the negative gearing and capital gains tax reform. So page 8 of one of the glossies called Negative Gearing and Capital Gains Tax Reform. Do you know about this one? 8-page glossy from budget night with a few examples. Yeah?
I've got a tax explainer that's
Yeah. So there's an
8
example.
pages long. Yep.
Yeah, there's an example from Jack, right? So Jack has a taxable income before capital gains of $25,000 in 29-30, realises a capital gain of $10,000 on an asset he purchased in 27-28. He doesn't receive any income support payments, so he's not exempt. And so the tax on his gain of $10,000 is $1,400 or tax rate of 14%. As it's lower than 30%, Jack pays an additional $1,600 in tax to bring the tax rate on his capital gain to 30%. So Jack is worse off, isn't he?
Well, I think we continued. There's tax offsets, so you need to look at it in totality. There's tax offsets. So Jack, just looking at the scenario again. Jack may have got the WATO. He may have the instant tax deduction. But we also indicate if he received income support, he would be exempt from the minimum tax.
But he's not exempt. So he pays the minimum 30%. It says here. So if a low income these are not tricky questions. The question is there are going to be low income people that make capital gains that are going to be worse off, isn't there?
So I think in the example we've given the statistics that show he pays an additional $1,600 in tax.
Yeah, so he pays more tax. Okay, thank you. Now look, there's been a lot written about the way this is all going to play out. So it looks like there's a lot of arbitrage, right? So effectively, if I'm a punter and I invest in a few shares and I make some gains and some losses, I can't net off the gains or the losses against one another, be they real or nominal. But if I'm an investment company and I'm going and buying a basket of shares, different companies on the ASX, the same companies, I can net off losses against gains and have a better tax position, can't
I? So I think we talked about that this morning with the Secretary, and Dr Johnson talked about it earlier as well, around the treatment of nominal losses. And in the scenario that you talked about, we said there was a range of matters to trade off on. And
well, do you want me to ask the question again, given Dr Johnson's here? Okay, Dr Johnson, how are you?
I'm good, thanks.
Nice to see you. So if I'm a punter and I buy a couple of shares in the ASX in my own name, right, some make gains, some make losses. Let's say, for argument's sake, some are nominal losses, some are real losses. And then over here, I've decided to buy a unit in a managed fund, right, and that happens to invest into the same ASX listed shares, in that case, the manager can net off the losses against the gains for tax purposes, can't they?
So even the individual can offset losses against capital losses against capital gains.
All losses, nominal and real?
So the system, so like I mentioned before, the system uses nominal losses. That's a tax system integrity, protecting the tax system. But you can offset your losses against your capital gains. So if you have a share, you get a gain. You've got another one with a loss. You can offset the loss that you've calculated with the capital gain that you've calculated as well.
So there's no, so you don't think there's any arbitrage here that would favour an intermediated approach?
Like I said before, this is the same approach that applied for 15 years when CGT was first introduced. It's also consistent with the arrangements that applied in other countries that have similar arrangements.
So what if I make a real loss?
So like I said, the gains, the way the losses are calculated, they're calculated on a nominal basis, and that's for tax system integrity.
What if I make a real loss as an individual shareholder versus a shareholder, a person who has invested in a unit in a managed fund?
If you've made a real loss, it would be capped at the nominal loss.
Capped at the nominal, so you could be worse off in that example.
Well, I mean, that would depend on a range of factors. So
no, I understand that, but we're just trying to work out, like, this is budget estimates, right? You've put a massive new tax plan on the table. We're trying to work out where the wrinkles are. That's our job. So,
well, I think
my understanding,
you worked out that day one when you came out arguing against all aspects of it.
More politics, eh?
Hey?
I'm trying to do my job and you're doing politics again.
Oh, come on, Senator Bragg. Honestly. The man that never smelt a political line in his life. Like, we'd all believe that if we didn't know you, Senator Bragg.
Come on. This is silly. So, the your real losses, if you make a real loss and you're a listed investment company, then your real losses can be netted off. But if you're a punter, you can't.
They also use nominal losses as well. So the system's based on. So if you're operating through a company that's based on a nominal system.
Yeah. So if I make a real loss as an individual shareholder, it's gone.
Well, if you make a real loss, you'll get
you said it was nominal. Was it real or nominal?
No. So, sorry, you just mentioned if I make a real loss, and I was just going to say that if you make a real loss, it would be capped at a nominal. So you can only get nominal losses.
Yeah, yes, it's capped at nominal. So you might pay more.
But you can use your nominal loss against a real gain to offset it.
Yeah,
that is totally fine.
But it is clear that, like, there are certain structures here which are advantaged here. It's very clear to me. So
asymmetric treatment of losses.
If you're in a family trust, or you're a punter, or you're a small business, or you're a company, you're looking at a 30% rate in most cases. Companies don't pay capital gains, but if you're a person or a small business or a trust, you're up for 30%. But if you're a super fund, you're only up for 10%, aren't you?
You get a super fund that's eligible, and providing they've held it for long enough, they'll get a 1/3. A super fund that has held the asset for long enough will get a 1/3 discount.
10%.
Yeah, so it could get their rate to a 10%, but it's a 1/3 discount.
10%.
A 1/3 discount. Yeah.
10%. So it's a bit like the Animal Farm, George Orwell. There's some people are more equal than others, and so you could have a super fund then deciding that they will then go and invest in the same shares as the person, and they pay 10% CGT, whereas the person pays 30%, right?
You're at 8 minutes, Senator Bragg.
Sorry, can you I couldn't quite get that one, sorry.
Okay. So...
And we have already made changes to super tax concessions this term, just to remind you.
I'm sure you've helped the super funds as much as you can. That's a high priority for you.
You opposed our...
You love it. This is one of your favourite things.
You opposed the changes we made to high balance super accounts, Senator Bragg, just for the record.
Okay, so...
You're at 9 minutes.
Sorry, I think
Bragg.
Dr Johnson wants me to repeat the question.
Okay.
Maybe I've been inarticulate.
Well, and
I apologise.
just preface it by saying it is very difficult to ask Treasury to give tax advice on the spot
Tax
about...
advice? Chair, come on.
Well,
this is
no,
ruled out of order.
about situations that you're dreaming up on the spot.
I'm dreaming them up.
Yes.
Come on. I know it's
Yes,
late,
you are.
but we're talking about the economy. You're putting this wrecking ball through the show, right?
Well, we don't.
Individuals
no,
are going to have to pay 30%.
Senator Bragg.
Small businesses,
we
trusts,
don't agree with that.
And you've carved out your best mates who only pay 10%.
No,
okay.
we're making some sensible tax reforms. I accept you don't agree with them, but I don't think you need to carry on like that.
I'm not carrying on. Dr. Johnson has asked me to rephrase the question, so I'll do it again. So, if I am a person and I invest into BHP shares, right? Any person in Australia now, unless I'm exempted, I'll pay 30%, right?
So if you're a person, you'll pay your marginal tax rate.
Minimum of 30 though.
Underneath the proposal, so you'll pay your marginal tax rate, and if your marginal tax rate is below 30, you'll pay a minimum of 30 on the capital gain. On the dividends, on your BHP shares, you'll pay at your marginal tax rate.
If I sell, is there a minimum of 30 or not?
I just mentioned there was a minimum of 30.
Okay, so the punter who buys a BHP shares pay 30% if they sell. If the super fund, let's say it's Australian Super or one of the union CBUS, let's say it's CBUS goes and buys BHP shares, how much CGT do they pay when they sell?
So again, it depends on their holding period, but they'll get a 1/3 discount, so it could be for an effective rate of 10%.
10%. Okay, so that's a good example of the arbitrage that you were introducing. Now,
no, that's in the current system, Senator. So at the moment, in the current,
sorry, that's not right. You're carving the super funds out.
Chair,
can we just
I think the witness is
time?
trying to answer Senator Bragg's question.
You can't explain your tax policy.
Hang on,
We're trying to sit here and explain it, and you keep interjecting because you're not liking the evidence that you're getting. So let him please answer.
Dr. Johnston finish.
Under the current system, a superannuation fund will be paying 10% on that share. Someone who's facing a 30% marginal tax rate will be paying 15%. Someone who's facing the 47% will be paying whatever half that is, 24 and a bit. So we already have this system where there are different rates that apply to different vehicles. That is already in the system. It's been a feature of the system for as long as we've had it.
I understand that.
This is not new.
Sorry, is the 30% minimum new tax new?
Is it a new?
Is the new 30% rate minimum rate new?
It is new. That's a new feature of the system. Yeah.
It is new.
Yes, but you were asking a different question, Senator Bragg, and you've just had the evidence that has...
I'm not asking. I'm asking...
Yes, you have. And it's an inconvenient answer for you.
How is it inconvenient?
Well, because you were trying to manufacture the fact that there was going to be some new arrangement where things were dealt with differently, and the evidence that you're being provided with is those arrangements exist already.
Is this budget papers?
Senator Bragg.
I'll go through the budget papers.
I'm not sure whether will this be your last question, Senator Bragg, and I can rotate the call? Otherwise, we can come back to you if you've got...
I just make the point that I don't have the exact page here because I wasn't expecting...
How unusual.
I wasn't expecting you to make that statement. But the budget papers make it very clear that in introducing your new 30% tax, you are exempting the superannuation funds. Are you aware of that?
So that tax...
Minister, are you aware of that?
I am aware of the tax reform arrangements, Senator Bragg, and I would point it out earlier to you that the government has already reformed superannuation tax concessions.
Irrelevant.
No, not irrelevant, and you voted against them. So, you come in here and you carry on about superannuation and getting an unfair advantage, and when we make changes to make the tax concessions on super fairer, you vote against them. That's your record.
The 30% new tax is a new thing. It's in this budget. It doesn't exist today. I'm asking you questions about that. My question was, does the new 30% tax apply across the board, or does it apply in certain circumstances? I gave an example about a punter buying BHP shares. They pay the tax. The super fund buys the same shares and they're exempted.
We were here when you...
Yeah, but I'm not...
That's a valid question.
So that's a question.
And it's been answered.
You've given the answer.
That
question.
You've answered it.
Yeah, we have answered it, and you didn't like the answer.
I'm going to rotate the call.
Okay. I have more. Thanks.
I think we're going to Senator O'Neill.
Thank you very much. And it's a good opportunity with you here, Mr Heffernan, to just ask a couple of questions. Following up on some commentary last week in RAT, where there was an insinuation that the government was actually doing nothing in relation to sham contracting in the road transport industry. I know for a fact there have been 2 transport industry roundtables held by Senator Stirl, well attended by state transport associations, transport operators, the ART, Australian Road Transport Industrial Organisation, TWU, National Road Freighters Association, meetings in Melbourne, and I understand that Fair Work, Australian Border Force and the NHVR and the ATO attended. So that is a correct and factual statement, isn't it, Mr Heffron?
Yes.
You were there.
I was there.
So can I just table for the committee's consideration an article in Big Rigs News on the 22nd of May, written by James Graham. There are more copies here for anybody who would like them. More trucking fleets grounded as crackdown gathers momentum. Senator Stirl's quoted as saying the feeling in the room is one of positivity that we've never seen before, and he continues, before November last year we had no engagement. Now the agencies are all on the same page with us, doing everything they can. So Mr Heffron, could you outline exactly what sham contracting is, why it's a concern to the ATO, and what you have been doing following Senator Stirl's industry roundtable?
Thank you, Senator, for the question. With sham contracting, a phrase often used to refer to a situation where an employer misrepresents the relationship with an employee. So they assert to take that person to work for them, but in a contract arrangement where to all intents and purposes actually an employee relationship. Now, I make the point at the outset that the employer-employee relationship is fundamentally a matter for the Fair Work Act and the Fair Work Ombudsman. So it's the Fair Work Ombudsman, if you like, polices those arrangements as to whether employers are trying to get around obligations they might have for employees by effectively renaming them a contractor.
I might just table the Fair Work Ombudsman 13th of March statement about this for those who want to look this up or are interested as we discuss it. Please go ahead.
And so there's a range of things in the employer-employer relationship, going to having a safe work practice, a range of standards of working hours and so forth that are matter for industrial awards, the particular contract, particular employment contract they're working under. That's a matter for the Fair Work Ombudsman. Where the ATO is interested is that the employer has an obligation to employee pay them their wages and withhold the amount and pay it to the ATO so we can put it in the government's bank account and can be used by the government for public purposes. Also, the employer has an obligation to pay the employee superannuation, and one of the consequences of trying to get around that superannuation, the obligation to pay that, would be by saying it's actually a contractor and not an employee. So the obligation for employers to make good on their superannuation payments to employees, that is a matter of great interest to us. We obviously administer the superannuation guarantee system, so to make sure that those payments are made, paid in full, and of course with upcoming payday super will be even more important for that to be done in a timely way. And also we want to make sure that the right amount of income tax is withheld from the employee and passed on to us.
There are other items like leave entitlements and workplace protections that fall under the proper employment relationship rather than sham, meaning pretence.
Yeah, exactly.
Contracting.
And I would say that whilst as public servants would be concerned about that, that is the remit of the Fair Work Ombudsman. And so because of the nature of the interconnectedness, on the other element, and some of these discussions, Australian Border Force has been involved because there have been tip-offs provided to the Shadow Economy Task Force, which we head up, of employers taking on as contract people on visas, and there's some concern about whether that arrangement actually contravenes the visa, because the visa typically be an employment one, and then the tip-off, the allegation would be, well, the employer is not actually treating them as an employee, consistent with the visa requirements, and is actually trying to get them to be a contractor. And so Border Force interested from the visa requirement, the Fair Work Ombudsman is interested from the sham contracting point of view, and we're interested from the point of view of making sure the right amount of superannuation is paid to the employee, and also the right amount of tax is withheld. So to deal with them, each of our organisations are subject to quite strict confidentiality provisions.
Yes.
And so prima facie, unless like a crime has occurred, we're restricted about what we can share with our colleagues in other agencies, and likewise they will be restricted what they can share. So to deal with that under the Tax Administration Act, under Section 355, Schedule 1, there's the capacity for Minister to establish a task force, and one of the conditions of the task force will be a task force for a specific purpose, but in that the information sharing can occur. And so that's what we agencies are doing. We're sharing information to try and make sure our intelligence is put together and coordinated to enable us to be most effective in our compliance activity, so we don't have one agency looking at one thing, another agency looking at another, another agency looking at another,
Yep.
where in fact they're interrelated.
That's repetition and waste. So there's a productivity benefit. But
Massive
there's also,
productivity benefit.
yeah, also a community benefit to people who find themselves in much more secure employment if this practice is stamped out, because it's very anti-competitive. It's undercutting the market in many cases, and it's also exploiting workers who have a right to better conditions. The single touch payroll is something people hear about but don't always know about. I know that the ATO has referred to an extensive data matching capability. How does the agency use such a thing as the single touch payroll, ABN records, tax returns, contractor reporting information to identify potential sham contracting arrangements in addition to the tip-offs that you've already mentioned?
I might get my colleague Mr Herschel to deal with that one.
Yes, so thank you, Senator. So single touch payroll, just to give a bit of context, is the system where at the point of payment, information is provided to the tax office about the salary that is being paid. And so that is very useful for where there's actually an employee, where the employer is not pretending they're anything other than an employee. And so that data we use routinely for many purposes, but part of it is when you log into your app or MyGov, hopefully at the end of July, not on the 1st of July, at the end of July, all your income is there, and so you don't have to find your old payslip. You know, it's already in your tax return. For around, let's say, contracting industries, whether that's for just general contractor compliance, but also identifying pretend contractors. The main reporting data that we rely on is called TPRS, which is, actually this is terrible, I can't remember the acronym, Taxable Payment Reporting System. And so where you are, so it's generally focused on high risk industries, which include construction, road freight, so coincidentally, where an employer, in the broad sense, somebody who uses a service, a road freight service, must report to us the income that they, or the amounts they pay to their contractors, or the people they're saying are contractors. And so this is the primary basis for us to ensure that those contractors don't just pocket the money and not lodge a tax return. Now, so we run a big data matching program across that, and indeed now increasingly we're moving that to pre-fill. So when a contractor, let's say a person who is being characterised as a road freight contractor, lodges their tax return, that reporting will be already in their tax return the same way as it would be if you're a salary earner. That helps us ensure that at least tax is paid. It also ensures that we know that those people are in the system and that they are in an industry. That data then, but it doesn't tell us much about whether they're a true contractor or a fake contractor. At this stage, we just know they're being paid as a contractor. We then, I suppose, use that hard payment data in conjunction with other information sources, which may be, for example, maybe some visa information, it might be tip-offs, but various other information to then identify those contractors, purported contractors, who might either be true employees or who might be employees within the extended definition for super. We, of course, also have information from, and indeed this is, of course, a very big initiative which is coming in on the 1st of July, a real game changer, Payday Super, where we will now know in real time if that contractor, supposed contractor, has had superannuation paid on their behalf. And so we'll now be able to see which of the contractors, because if there's a contractor who has been reported to us under TPRS and they are being paid super, we're probably less worried because their super entitlements are being met. We're making sure we get their tax.
Yep.
But this will now be the triangulation of data and together with other sources, which mean we will be able to identify suspicious contractors.
Thank you, Mr. Hirschhorn. It looks like people get paid properly. They might be classified properly. Their superannuation is more likely to be paid properly. So I think this is important information to get out in the public place about the ATO working with the TWU, and I just want to congratulate my colleague Senator Stewart for his determination to get this out in the public place, because it's good for everybody. Even the small businesses who are being undercut by the unscrupulous non-providers of the proper protocols. Thanks, Mr. Hirschhorn. Thanks, Chair.
Thank you. Senator McDonald.
Thank you very much, Chair. I'm an ex-accountant. I was a public practicing accountant, and I cannot begin to tell you the number of messages I'm getting from colleagues just with exploding head emojis and the level of complexity that you've just introduced into the system that was already incredibly complex is really distressing to watch, and thank God every day I'm not still in that business. I want to turn quickly to the Commissioner on for ACNC, please, Ms Woodward. I'm just wondering what engagement the Charities Commission has with AUSTRAC, the AFP, ASIO and AGD or other similar intelligence agencies in monitoring foreign funding to charities.
Senator, we have contact with those agencies. We have some specific MOUs with, for example, AUSTRAC and the AFP, and we deal with them as needed. If we have concerns or if they have concerns about a charity, they would contact us.
How often would you have contact with those organisations?
That can vary considerably. For example, with AUSTRAC, we would use an AUSTRAC search as part of our... We would do that fairly regularly in terms of our compliance work. It would be less frequent, for example, for us to receive intelligence from ASIO, for example. So it very much depends. There wouldn't be a standard thing per agency.
In the last 12 months, how many investigation requests have you received from intelligence agencies for a charity due to foreign donation and funding concerns?
I would have to take that on notice, Senator.
Can you outline how many instances a charity has lost ACNC status due to foreign funding concerns to date?
I'm not sure how we would categorise the foreign funding concern. That would have to fit within our framework of, are they not using funds for their charitable purpose? Are they using it to support a sanctioned organisation? So it's not a sort of easy label. We could attempt to take that on notice.
Perhaps over the last, say, 4 years, if you could break that up by some of the issues that you might have discontinued or removed ACNC status.
We can do our best.
Thank you. Have you seen an increase in concerns raised in relation to foreign funding of charities?
As I say, Senator, we don't categorise them in that way. I'm not aware that we've seen any spike in that area of concern.
Okay. Can you outline some of your risk-based approach to regulation and your standard independent process to review details of concern that may be raised with you about charities?
Our risk-based approach would draw data from a range of sources. We have concerns that are raised by members of the public. They might come via employees, volunteers. We could get concerns by way of referrals from other agencies, state, territory, federal agencies. We would have concerns if we've done our own reviews and our own work, and all of that together, along with things like, for example, AUSTRAC have recently published their not-for-profit NPO terrorism risk assessment. We contributed to that, and we would update our risk matrix accordingly for sources of intelligence like that.
Do you have any concerns with the Environmental Defenders Office current liability position of $5,691,164?
Senator, the Environmental Defenders Office is a registered charity, as you know, and the register shows that their reporting is up to date, and their next report is due on the 31st of December 2026.
So that means that that liability has been paid in full by a donation?
I can't speak to the particulars of any one line item of any charity.
Given that it's been raised with you by me previously, have you raised any concerns with ASIC about their financial position?
Senator, I can't comment on the particular investigation or not investigation or information we would share with other agencies. I can say that the register's there. It is a ACNC governance standard that the responsible people of any charity must ensure that their charity does not operate while insolvent. So for any charity, if there's that concern, they have an obligation to notify us.
Would it concern you that this is an organisation that's been found by an Australian court to be in breach of our standards? They confected evidence, they constructed Aboriginal cultural heritage. They then had to pay a massive fine, a massive penalty, or the legal costs of the other company. That payment has now been paid by donation with we have no record of where it's come from or what its purpose was. That's not of concern to you? This is a charity that's trading on the goodwill of the Australian taxpayer to get certain benefits. Not worthy of investigation?
Senator, I can't comment on whether we're investigating any particular charity or not.
I appreciate that you can't. How about if it was a hypothetical company? Would you think that was something that you should be following up, or given that their books are in order, that it's not, you wouldn't need to investigate or make concerns of? I'm trying to understand how a charity, what standards a charity must operate to under the ACNC's requirements.
So we have the governance standards. So I mentioned one of those in relation to operating, not allowing a charity to trade while insolvent. As I mentioned earlier, we have external conduct standards. If AUSTRAC had concerns about the flow of money, that would raise concerns with us, and we would certainly be taking the lead from AUSTRAC on that. We're obviously not a criminal investigation agency, and we're not an overseas money laundering assessment agency, but to the extent that we would have any concerns raised with us by those agencies, we would take those concerns seriously.
What about, though, if an Australian High Court has made a determination on the conduct of this agency, of this organisation, that is the beneficiary of having status, charity status? Wouldn't think that was worthy of some sort of acknowledgement or investigation?
As I say, Senator, I can't comment on whether we're investigating or not.
Sorry. Is there no requirement to have I mean, that seems to me to be a pretty low bar. You know, as an Australian court has determined that this organisation has been so egregious in its action, it's forced them to pay millions and millions of dollars in court costs, but that's not a concern that wouldn't raise an eyebrow with the Commission?
I haven't said it's not a concern. If a court has ruled against a particular individual's behaviour and that individual's associated with a charity, as is the example in many situations, so I'm not commenting on this particular charity. In general, if there's someone associated with a charity that has involved in egregious behaviour, that can be relevant to whether the charity itself, because our powers are over the charity, not over individual responsible people or even the individuals associated with the charity.
Senator McDonald,
one last question. Thank you. So I've just raised one charity who was in breach of Australia's standards legally. I've got another one, the Australian Council, Conservation Council of ACT, which, in addition to being a charity group, has a deductible gift recipient status. They host events and awareness for National Rising Tide Book Club, an organisation that has just blocked the Newcastle port and seen coal ships incur, who knows, tens, hundreds of thousands in demurrage fees, shut down a major export of Australia. Revenue Group might be interested in that. By the answers you're giving me, I don't know what an organisation has to do to be in breach of Australia's very generous charity status under the Commission's rules.
One of the ACNC governance standards that might be relevant for the type of general behaviour you're talking about is Governance Standard 3 about compliance with all Australian laws. That deals with where there's breaches of the law that have more than 60 penalty units. So where there are proven breaches by the charity rather than necessarily the individuals, that can be a situation where the question comes whether that charity should still remain registered.
All right. Thanks, Chair.
Thank you. Now, I have a list of more people that want to speak that will take us beyond 11 at this point. So I'm going to really warn it 7 minutes, and if people can keep it tight, that would be really helpful. It means everyone gets their questions covered and we can finish on time. Senator Bragg.
Look, just where we were on the CGT issue, so can a person pay a higher effective tax rate than the real gain if they have a portfolio of shares?
It would depend on the circumstances of their investment, the portfolio, how long they hold it for, the inflation rate, a number of factors.
Sure, but there could be a scenario where they could pay a higher effective tax rate than the real gain.
Sorry, a higher
effective tax rate than the real gain.
So you could do that under the current system. You can get a higher effective, you can get an effective tax rate above 100 in the current system.
Yeah, so you could do that under the new system.
But you can get it under the current system.
Yeah. What about the new system?
Theoretically possible, I guess. I don't know. I need to work it out. I need to take that on notice.
Okay. Well, look, we're running out of time. So, look, let me ask you: who did the modelling on the 35,000 fewer houses? Was that you?
The economic modelling that's in box 4.4. That's done by my colleagues in macroeconomic group.
So, who did the modelling on the 35,000 fewer houses?
The modelling on the box 4.4 was done by
They were here this morning.
Okay, so that's not you?
Macro.
So, what about the revenue implications of 35,000 fewer houses? Do you look at the stamp duty implications?
We don't typically look at...
We don't. That's a state-based tax.
You're not worried about that?
Well, it's not relevant for the purposes of the budget.
Okay, are there any Commonwealth tax implications for having 35,000 fewer houses that you modelled?
Well, the budget has a positive impact on supply overall, as you know, Senator Bragg.
The budget also pushes supply down by 35,000.
Yes,
so I'm asking about that.
It has a positive impact on supply of housing.
So the question is, did you model revenue implications of having 35,000 fewer houses?
Well, sorry, you go.
The revenue
modelling or the costing that was done on the CGT and negative gearing had regard to the macroeconomic group housing modelling? And so I think the answer is yes. It's part of the costing that was there, that's in the budget for CGT and negative gearing.
Yeah. Reflected in the budget documents, Senator Bragg, is the answer to that question.
Did you model the behavioural impacts?
Behavioural impacts?
Yeah.
When we undertake the costings, we do look at behavioural effects, yes.
And what did they say?
In relation to... So there's a range of potential...
75,000 more owner-occupiers, for example.
What are the behavioural impacts?
Well, I just gave you one.
No, I think the doctor's got something.
So we incorporate behavioural effects. So to the extent that people make choices around, where to invest, how to invest, the holding period, we incorporate that into the costings.
Yeah. Now, what about with using a different arbitrage analysis? What about if you're investing into Australian property through a managed investment scheme? Can you derive a tax benefit compared to if you're doing it as an individual?
So I guess it would depend on the nature of the investment, how you're actually doing it, what type of property you're investing in. There are different arrangements for new builds versus existing builds, so it probably depend on a range of factors, I think.
What's the tax rate for people who are investing in property through a MIT?
It will depend on, well, it'll actually be their effective marginal tax rate on the investment itself.
It would be their effective marginal rate?
Or their marginal rate, yeah.
What about if it's a foreign investor?
So I might need to get one of my colleagues to help think, but my understanding is that for non-real property, it's typically exempt. For real property, we may have withholding, but I might get my colleague, Mr. Robinson, to help.
So, Senator, for a foreign resident investor who is subject to capital gains tax on the disposal of real property, they're currently not subject or not able to avail themselves of the 50% CGT discount on acquisitions after December 2012. So they would pay capital gains tax on the capital gain at the non-resident tax rates.
What if it's
which are different to
we're talking about
Australian
individuals, not
residents.
institutions, right?
Individuals, that's right.
Yeah. What
and
about
then for institutions, to generally be investing through a MIT would be most common. It'd be 15% withholding rate.
15% withholding rate.
That's right. On commercial
so that's
capital
gains. That's for a foreign fund manager. Yeah,
That's
so a
right.
foreign fund manager could invest into Australian housing, pay 15%. A super fund could pay 10% capital gain, but a punter would have to pay 30%. Or you could potentially invest through a listed property trust and you could get a cheaper rate. But there are more holes in this than you can poke a stick at, because there are now more opportunities for arbitrage than ever before because of this 30% minimum rate that now applies to individuals if they want to invest in Australian housing. So, I mean, you've really gone out of your way to make it unattractive to individuals.
So I don't.
What do you make of this notion that there's some investment that's good and some investment that's bad?
You put a proposition. I think you need to let the official respond to it, Senator Bragg.
So I think just on the minimum tax as well, the minimum tax applies to the real gain. So it's not a 30% rate. Actually, their effective rate would be lowered, and it would depend on the rate of return on the investment and the rate of inflation. So, for example, if they were, they're getting a rate on average around 5% and it was 2.5%, they'll be paying half that. So the rate would be around 15 rather than the 30% on the real gain. In the current system, we have different rates that apply across different types of investment vehicles and different types of systems, so that the super system is separate to how we tax individuals' personal income, which is different to and that is part of our current system. That part is not changing. There is a change in the rate, and so when you change rates, when we change rates in any case, the same thing would flow through. So nothing is changing in that regard. There is still differentials across different types of vehicles where you can invest.
I do, with great respect. Yeah. We understand that there are distortions and arbitrage opportunities that exist today. No one is suggesting that they're not. The point is that they're going to be supercharged in this new world, because in the new system...
No.
Sorry.
Again, I'm not sure that's...
No, that's your comment.
Are you introducing a 30%...
No.
Are you introducing a 30% minimum tax?
So
are you?
95...
Minister?
Senator Bragg, we have already answered that question.
What's the answer?
Okay, so I don't think...
what's the answer?
Well, we've already answered it. Yes, we are introducing reforms.
New 30% minimum tax.
We are introducing a range of reforms to the tax system, and the evidence you've heard tonight doesn't support the propositions that you are putting. Just to be clear.
30%.
Senator, we're at 8 minutes.
Okay, well, my last question is then... you have costed the budgetary impact of these new taxes, have you not?
That's right, yes.
Okay, what's the 10-year figure the Treasurer's been talking about on the ABC?
So I think...
We haven't seen any official documents, we've just seen ABC stuff.
So I think the...
What's the 10-year cost?
Just bear with me a second, I'll get that for you. Sorry, I just don't want to get the wrong number.
By the way, Geelong's lost by a point.
And over the forward estimates, all of that is returned through the Working Australian Tax Offset, and you voted against that today. Just to be clear.
No one cares about your politics. I've asked.
Just to be clear.
I've just asked the good doctor a question about the budget. I don't care about the politics.
Well,
thanks.
Context is important. You voted agast income tax
you're all
cuts
politics
today.
And all spins.
That's what you've done.
Dr. Johnson's got the answer.
All feathers and no meat. Yep.
Yeah.
Okay. What do you got?
So the 10-year cost of the package, which it's on page 90 in box 3.2 of budget statement 3, it improves the underlying cash balance by 77.2 billion from 25-26 to 2036-37.
Yeah. Can you supply on notice, because I know I've got to stop now, have you done an individual year by year?
So we present the individual estimates year by year over the forward estimates. They're in budget paper 2. I can get those for you if you like. We also put them in budget paper 4. It's just at the back of the statement. Just bear with me a second. I'll just get you the reference.
The chair wants to move on.
Sorry?
What over 10 years?
Open the book.
Over 10 years? Do you have it over 10 years?
So we publish over the forward estimates, disaggregated estimates.
And box 3.2.
Over 10 years, is it?
Box 3.2 provides you over the medium term some of the changes.
I'm looking for the 10-year figure.
Well, that is the medium term, 10 years.
10 years is what?
Yeah.
Yeah, so that's that 77.2 billion figure.
I think you have what you need there, Senator Bragg.
Well, have a look. Senator Bragg, do a bit of work yourself. Box 3.2, page 91, budget paper 1. That gives you...
Budget paper which?
Budget paper 1, the one you've got in your hand. Page 91. That
Chair's
gives
going to
you...
get angry with me for taking more time.
No, I'm just trying to show you.
Page 91.
Gives you a sense of...
Page 91, I can't see 10-year costings here.
You can see...
Are we looking at the right thing?
Over the medium term, it's identified there, which is the normal way that Treasury would report these matters in the budget papers. So we have a forward estimates figure, and then you can see...
It doesn't have anything in here.
Well, you can.
Treasurer's talking about 10 years. His commentary.
I just want the 10-year figures on notice. It's not a trick question.
Talking about
Dr. Johnson has that view as well, and we will rotate the call.
Thanks.
Senator McKim.
Thank you. Just briefly to finish up on my previous line of questioning, which I thought was quite reasonable in pointing out the vast buffet of tax loopholes that exist for the gas industry that I might add aren't available to nurses, teachers, builders. And I was met with some responses that did sound very reminiscent of what I heard from the gas industry during the inquiry that we ran. Minister, can I ask, did you attend Labor's $5,500 a head budget night fundraiser at Realm? You didn't attend. Can you tell me which fossil fuel companies were in attendance.
I have no idea.
You have no idea.
I was dealing with budget matters.
You don't think it's important to know? No, I've asked Labor ministers all week and I haven't
I'm not
received.
responsible for party matters and all...
You're a minister for Labor.
I understand what I am, but just to be clear, I'm here representing the Treasurer and I do not, under that portfolio, I'm responsible for certain matters not relating to how party operations and decisions are taken, and all disclosures are made in accordance with electoral disclosure laws.
Was the Treasurer in attendance if you're representing him? Was the Treasurer in attendance?
I cannot answer that.
You don't know if the Treasurer was at the budget
No, I
night
don't. I was
fundraiser?
busy with the budget on budget night. Well, I spent a large part of that with the Treasurer in this building, I can tell you that.
And I will say that the AEC disclosure rules do not show who was in attendance. We will not know if those gas executives who were celebrating not getting a 25% gas export tax were in the room. You can roll your eyes as much as you like, but the public are furious about this, so keep rolling your eyes right through the next election. Over to you, Senator.
Well, that was worth waiting for.
It was. It absolutely was. Another minister avoiding answering questions.
No, I answered every single one of your questions,
you didn't.
Senator Hodgins.
You didn't.
I did.
Was the Treasurer...
Inconvenient
we're very
truth.
short on time.
Yeah, sorry.
Let's go to Senator McKim. Thank you.
Mr Hirschhorn, just one further technical question on the way that the cash refunds are calculated by the ATO in regards to decommissioning costs in the context of the PRRT. I somewhat facetiously asked you if you applied interest rates, but can I ask, is there an uplift provision applied in the same way that is in the rest of the scheme?
Yeah, so, Senator, I might just, can I say, during the break, just clarify something that I took on notice a little bit beforehand. So we generally publish information about the PRRT in two major spots. The Corporate Tax Transparency Report, where a specific exception to normal transparency or normal confidentiality requirements, we publish very specific figures. And we publish the PRRT payable.
On a project basis?
On a project basis. I clarified during the break that where there is a PRRT refund, currently not very many, we do not publish it under that mechanism because it is not PRRT payable, it's PRRT refundable.
Mm-hmm.
The other place that we publish PRRT information is in our annual tax statistics, and I will leave you with a sense of anticipation, but later this month we'll be updating that. The particular page is GST and other taxes, tab 5. That will include a new field, which is PRRT credits at decommissioning, and that will show that there have been some crediting. So that may not be necessarily cash in the sense of a cash refund, but it might be an offset against other taxes, so effectively a cash benefit. Yep. That will show some minor amounts. Now, of course, the nature of the PRRT, so again, I think it's really important to go back, it is a super profits tax over the life of a project. The uplift factors are to try to give a recognition of the super profit. Now, obviously, the level of that uplift is a policy matter, but the idea of the uplift is to give the super profit. The nature of a closing down expenditure is it's right at the end of the project, so it gets no uplift.
It gets no uplift.
Because it is used immediately the moment that it is effectively expended.
So you've characterised it effectively as a PRRT refund, which I think is fair. So is the real value of that refund less than the PRRT that was paid simply because of the passage of time?
So of course it's in one way you would say that in a project where PRRT has been paid because super profits are projected under the formula, and then there's a closing down expenditure, effectively the government has been overpaid PRRT. It has been received more PRRT than the tax payable on the actual super profit of the project, and so it is giving some back at the end without interest.
Without interest. So the real value.
So the real value of the refund is less than it would effectively if the right super profit had been taxed through the project.
And when did you say those figures were being published?
That will be later this month.
Later this month. You don't have a date?
I'm expecting it's around it won't be right at the end. I'm expecting at the moment it's going to be around the 17th of June.
Okay. All right, thanks. That's helpful. Thank you. Dr. Johnson, just because we're short on time, I'm going to go back to the questions I was asking you earlier before dinner around fuel excise collections. I mean, if I could just try and characterise using Treasury's forecasts between 24-25 and 29-30, CPI is going to go up 17%. Gross fuel excise will increase by 19.4%, so that's 2.3% above inflation. Fuel tax credits, which represents mining and primary industries in the main, will increase 25.5%, so 8.4% above inflation. And so net fuel excise, which is the gross fuel excise minus fuel tax credits paid out, are going to be 15.3 below inflation. So my thesis that I'm asking you to respond to, because fuel excise is a sort of a volumetric tax, not a price-based tax, that it appears that in 2030 Australia is going to be importing and burning more fuel than we are today. Is that a reasonable conclusion to draw from those figures?
So if you like, I think, I can step through. So, we get something similar. So the gross fuel excise, that grows by about 2%. So that's kind of pretty good proxy for your volumes over that 5-year period. So what that does, that actually reflects two things going on. One is that real petrol excise it falls by about 5%, and that's because we've got light vehicles reducing fuel consumption because we've got improved fuel efficiency, EV take-up, etc. Yeah. On the other side, it's diesel, so there's a rise in diesel excise, and that goes up about 7%. And then there's some other bits and pieces with some of the other smaller fuel. Now, on the fuel tax credits, diesel represents the largest share of fuel tax credits. That's the reason why you see this disparity between what's happening at aggregate level on excise versus what's happening on the fuel tax. In terms of looking at the so when we look at them, we don't make a distinction between imported versus domestic. It essentially gets the same tax treatment for us, so we don't kind of follow that. But I think you also had some questions around fuel security, but I think that's probably better. There's a fuel security task force in PM&C, and it's probably better to direct the questions there. I'm not an expert in that area.
So you can't form a view based on those figures about fuel imports because you say that domestically produced fuel is part of the mix.
So we don't make a distinction between whether it's domestically produced is coming in or if it's imported fuel. In terms of the tax treatment, it's essentially the same.
Right. But if we set aside whether it's imported or domestically produced, we're going to be consuming more fuel, aren't we, in 2030 than we are now?
Yeah, that's right. It's primarily driven by increased consumption of diesel fuel. Petrol fuel looks like it's slowly declining. Yeah.
So that's reflected in a significant growth in fuel tax credits, which is revenue foregone to the budget.
You're at 9 minutes.
So, fuel tax credits are kind of separate. So, there will be increase in diesel consumption, the amount of diesel that's consumed, that continues to grow, and it kind of grows along, tracks pretty closely with the economy in a way because it's often used by business. The fuel tax credits, they apply to certain off-road uses of fuel. But there might be a disjunct between the two.
I'm going to let Senator Barbara Pocock just have the last minute. And
1 minute. Yeah. 1 minute.
Okay, a question for you, Mr. De Cure. At the last round of estimates in February, I asked how the idea to move Mr. O'Neill from the TPB originated. In particular, whether it originated from you, the board, or the tax commissioner. You took the question on notice and your answer was unclear to me. So I'm asking you again, Mr. De Cure, who specifically initiated a discussion to move Mr. O'Neill?
Senator, the matter was, I believe, answered previously in that it's a matter for the staffing of the TPB is a matter for the Commissioner. And we have, in the course of our day-to-day undertakings, I meet with the Commissioner regularly. and from time to time we discuss the staffing needs of the TPB.
Yeah, I've heard
I
that
think
earlier.
that's as much as should be said on this subject.
So I've heard all of that before, Mr de Cure. I actually want to know where this decision originated, and you're clearly not going to answer that. Mr Heffron, can you please confirm whether you... It's clear you made the decision, you've told me that.
Yep.
Can you please confirm whether you initiated the discussion, when the decision was made and when it was first communicated with Mr O'Neill?
Sorry, when... what were the three things?
Whether
sorry?
whether you initiated the discussion, when the decision was made and when it was first communicated to Mr O'Neill.
To give you a complete answer, I'd have to take it on notice.
Okay, thank you. Prior to this discussion, before you had any discussion with Mr O'Neill, had you previously discussed with him when he might move into another role?
I'm just trying to check my memory, which at my age is flawed. I have to check, but certainly I had a conversation with Mr O'Neill. That's it, but fairly. It was in the context of the discussion I had with each of my Band 2 SES officers, which Mr O'Neill is one. So I had an organised process of talking to each of them about their, futures, what they want to do.
When?
It went through the calendar year.
I'll ask you to take it on notice because it's painful to watch you trying to remember.
Yeah,
was Mr O'Neill
I think that would be wise, Senator.
Mr O'Neill supportive of the move?
The details of the discussions I have with my staff, I prefer to keep confidential.
Can you confirm if this role that he's now in is permanent or a temporary transfer of Mr O'Neill?
So the role he's in, assisting the Ms Woodward, is a role that I think will come to an end. Precisely when that occurs depends a lot on the context of...
What role will Mr O'Neill occupy? Does he return to the TPB?
Mr O'Neill won't be returning to the TPB.
Where will he go?
Well, that'll be a discussion I'll have with Mr O'Neill when the right time comes to decide where he'll be best placed within the ATO.
Why will he not return to the TPB?
This is well more than 1 minute, Senator.
Yes, I understand that.
So why he won't return to the TPB?
Why will he not return to the TPB?
Mr O'Neill's had quite a bit of time at the TPB for the health of an organisation. All senior people need to rotate through the organisation, and that's what will happen.
For those who are following at home or want to understand why I'm down this rabbit hole, which is an important rabbit hole, is without Mr O'Neill's careful work in the TPB, there would never have been the exposure of PwC and the years of scandal that followed. He is, in a sense, I've never spoken to him, but he is, in a sense, a whistleblower. What protections are you required to offer to someone who has acted as a whistleblower? Surely protection of his return without any diminution of his employment is a critical protection for him. Minister, do you have any comment on that?
Sorry, the issue is about ATO staff. I don't think there's any context in which the whistleblower label can apply. Mr O'Neill was there to support the board to do their job. As I understand it, Mr O'Neill did a good job supporting the board in their decision making.
We have previously discussed, and he's been strongly endorsed by Mr de Cure certainly and others. Yep. And it is clear from the transcripts in our previous Senate inquiries and the PJC that without his interventions, and there have been a number of specific attempts to attack his employment, which are on the public record. So this is an important question because it is about protection of public servants who stand up against great odds for proper public service and calling out things that really were extremely corrupt at the time.
Senator, from the information I've had in front of me, which admittedly is just from the 1st of March 2024, when I took over as Commissioner, but recall in, I think, March or April, maybe May 2024, there were extensive questions on notice provided to this committee, or possibly another committee, but certainly a committee of the Senate. I just don't agree with the assertion that there's any kind of... there was no whistleblowing. There's no need to protect any whistleblower in this context. Mr O'Neill had a job to do to support the board and its work. My understanding, he did that very well. And my understanding now, and my expectation, is that whatever role I place Mr O'Neill in, he will do an equally sound job.
Well, I'll be back at estimates next time, and you can anticipate understanding exactly what terms have been changed for Mr O'Neill. Thank you, Chair. And for your indulgence.
Sorry, Chair. I do want to make the point that the placement of staff in the tax office, the senior staff, is a question for me. The ongoing implication that somehow there's a, I think you might have used the word in a previous thing, some sort of, wasn't retribution, but you used a specific word, and it's quite jarring. My task is to ensure that the healthy organisation is as good as it can be in the present and in the future. Part of that is to ensure the leadership of the organisation is rotated through the organisation to make sure key parts of the organisation are properly led and properly dealt with. And that's my task. That's what, when I sign up for the job, that's a big part of it, and that's what I intend to do. And
it's my job, Mr Heffron, as a senator, where years of work in the Senate, not just by me, but a number of senators here, who have been, our work has been informed and facilitated, and the work of the Parliament has been facilitated against considerable opposition within the ATO before your time. It's my job to make sure that people who do things like that are courageous and require great persistence are not implicitly punished or have their employment circumstances changed for the worse. And so I'm doing my job. I understand the job of leadership of the ATO, but it's my job to also make sure the people who do brave things that assist the Senate are also protected, and that's why I'm asking.
The notion that there's been some kind of implicit punishment...
It's on the public record how Mr O'Neill was treated.
In relation to this one, I categorically reject.
I understand.
There has been no implicit punishment for Mr O'Neill. Mr O'Neill continues to have an important role within the ATO.
I don't want to keep going
entity.
backwards and forwards here, but I do feel the need to reply.
I think it's only fair that the Commissioner respond to the assertions and allegations that you have put, Senator Pocock.
They are allegations, Minister, that are on the public record in Senate documents. The series of behaviours that Mr O'Neill were exposed to, which
I think you've made your point.
Thank you.
Thank you. Yeah. Is there anything you want to add, Mr Heffron, before we move on?
No, I'll look forward to the next one.
Okay, thank you. Senator Colbeck, I think you've got a very quick question.
I do. Just following on from the previous estimates where I asked Mr DeCure about matters relating to PwC, you said that you had one and that it should be finalised by, I think, the end of the financial year, and just curious to know where that final matter is. I've had a look at the website to check if anything's published. I haven't seen anything, so I'm not flying blind. But I'm just curious to know where that one final matter, which I think it was a corporate one or a business-based one.
Yeah, thanks, Senator Colbeck. After the last...
Mr.
Can we have the sound?
Sorry, start again? Yes.
Yeah, can you hear me now?
Yep, thank you.
Yep, okay. Senator Colbeck, after the last estimates, I did correct my answer. I was mistaken. I was referring to there was one matter that remained outstanding in relation to the Collins PwC confidentiality leaks, and there were in fact 4 matters in process at that time. So I provided a written correction to that. The one matter
I'm 4 times as excited now.
And my apologies for doing that. That one matter in relation, still outstanding with the Collins confidentiality scandal, the agent involved in that we've made findings and issued a sanction against them, but they are exercising their appeal rights and have been granted confidentiality orders by the federal court, so I cannot comment on the progress of that matter. The other 3 cases deal with more specific issues that centre around things to do with the base erosion and profit shifting schemes, the use of legal professional privilege and applications to the Foreign Investment Review Board. Those investigations are in train. The statutory time frame expires in October 2027. We're currently working through a large tranche of information that PwC has provided, and we are very, very focused on concluding those investigations as expeditiously as possible, but it probably won't be by the end of this month. I would imagine it'll be in the next 2 to 3 months.
Okay, you've anticipated my supplementary questions nicely, thank you. Can I just make one comment to you, Commissioner, in relation to Mr O'Neill? I asked in this forum at one hearing whether Mr O'Neill was appearing unencumbered, was the term that I used. So can I just place on the record my confidence in the work that he did in assisting this committee and also the Finance and Public and Administration Committee with respect to the PwC matter. I have a sense, in the same way Senator Pocock does, that without the frankness that Mr O'Neill provided to us, we may not have got where we got to. So I just want to, I suppose it's an endorsement if you want to take it that way. I'm not looking, I listened very carefully to your answers to Senator Pocock, and I appreciate what you said, but I felt at times during that period that I had concerns about the way that Mr O'Neill was being treated, and that's why I asked him that question. He answered very much in the affirmative, so I took that on face value, but I just want to put that on the record in the context of the service and the work that Mr O'Neill did in support of this committee, but also the other committee which I was the chair of at the time, in some very important work that we were able to achieve because of his assistance. I do have some other questions for the Tax Office, which should not take too long, if I can.
We've got 4 senators who still want to ask questions and 20 minutes to go.
Can I do
anything
until
you can put on
1:45?
notice would be helpful.
Can I do till 1:45?
Please.
Thank you, thank you. I just want to go to questions I asked last time in relation to tax on tobacco, and you indicated that you were doing some elasticity modelling in relation to that work, and I'm just trying to get a sense of what that work shows, and my particular question is what proportion of a market needs to be subject to a tax like the excise for that tax to be effective in achieving the behaviour that it's looking to achieve? So the whole point of charging high excise on tobacco is to be a disincentive to smoking and to reduce smoking rates and stop people taking up smoking. But given the information that we got yesterday that indicates that 80% of the tobacco being sold in the country is through the illicit market, I'm trying to get a sense of how effective the measure actually is at the settings it is with those parameters in place.
I don't think I'm able to answer your question because it is quite a complex question. You did ask us about elasticities, and I recall...
Yes, but I lost the call before I got to ask you any detail about it last time.
And I was just going to let you know that work is ongoing.
Yes.
We've looked at a range of the academic research around, which shows that the relationship between tobacco price, and consumption has changed, particularly in light of the size of the illicit market. It does mean that now determining price elasticities is more complex, which is why our work continues to be ongoing. It sounds like you are now aware of the ABS work that was released yesterday.
I think, like a lot of people, startled by the numbers.
Yeah, I think that will help this work going forward.
Yep.
And so I think, I think that's all I can say tonight.
So could you take the specific question on notice for me? It's a technical one, and if you could do that. And in that sense, given the growth particularly in Victoria we're seeing at the moment with respect to alcohol, Have you looked at any of the modelling that you've been doing and applied it to alcohol so that we don't end up in the same situation in that circumstance? And particularly in respect of the changes to the wet tax, where the threshold's been increased from $350,000 to $400,000. Are there any measures being considered as a part of that change to manage what I would think is an increased incentive to try and manipulate the scheme, which is what I think is happening in Victoria, to avoid excise?
I'm happy to take that question on notice. I think at the last hearing we did talk about the increase in illicit alcohol, and so it's something that I only talked about very recently with my staff. So happy to take that question on notice and provide you a more considered answer.
Thank you.
10:45.
Can I make just one comment, observation on the 80% figure on comparing the different figures which are around?
Yeah.
I think it's important to, well, just in placing it, that the 80% figure for the ABS, it's described as tobacco, but it's actually including nicotine. It's actually a nicotine calculation, so it includes illegal vapes.
The description does differentiate. So, nicotine consumed increasing by 40%, and the increase was underpinned by a large rise in illicit cigarettes, as well as e-cigarettes and other nicotine products. So I get all that, and I've read the Commissioner's report, as I was exhorted to do last time, so I'm...
Yes, so I suppose I'm just making the comment that because the Commissioner, their calculations, they're quite careful in how they split between tobacco and non-tobacco nicotine.
Yep.
Their number of around 50% is about equivalent to the ABS number of around 80%.
I will, though, say if I look at the peak of excise that was collected in 1920 at 16.3 billion to 4.13 billion, which is projected in this year's budget documents, that's a 74% reduction. So the Commissioner is saying 50 to 60%. The tax numbers say 74, 75%, and that is excise and customs duty.
It's all customs duty, can I just say? But also I'd just say that also reflects that actually the absolute amount of cigarettes consumed is coming down. It might be said as a growth in vapes.
So the amount of illicit cigarettes is going down. The evidence I would suggest from the ABS data is that the amount, and they're saying the amount of nicotine consumed, and that includes all the other bits and pieces,
so nicotine
is up by 40%.
So nicotine increasing, but I would just say that the reduction in excise.
I'm sorry,
tobacco consumption is decreasing.
Thank you. Thanks for the callback. I'm going to try and please everyone, and if we can keep our questions to 5 minutes, then I think everyone will get a go. So, Senator McDonald.
Thank you. I've got some questions on trusts. Thank you. Look, I think given that trusts are a legitimate and very natural legal structure, they've been developed over centuries of common law tradition. They're used for perfectly understandable reasons by hardworking families and small businesses. The current Cabinet Secretary has recently stated that legitimate purposes of trusts include asset protection, inheritance and support for minors in a range of different situations. That trusts play an important role in the economy, and that for many Australians who set up a business, they walk into their accountant, tell them they will be setting up a business, and their accountant says, great, here's your PTY Ltd company and here is the trust that goes with that. Very standard for Australians setting up a business, and the purpose is not about tax reduction, the purpose is for asset protection. And finally, I think trusts have a really legitimate role and people are getting them for precisely the reason I just described, that is for asset protection. It is to support them in a way that they structure their affairs. So I think, from all of those comments from the current Cabinet Secretary, it is reasonable to think this is not some sneaky tax rort protection. This is a very standard asset protection and way of doing business in Australia. Do you accept then that in many, perhaps most small and family businesses where you've got family members doing the books, helping pack orders at night and on weekends, including mums who might be at home looking after kids, and children helping the business while studying at uni or completing TAFE, that this minimum tax at 30% is going to most severely impact low-income workers than try to tax apparently rich people. That is what I'm asking. Isn't this going to attack the most marginal and low-income Australians?
That's not the advice that we have. Over 90% of small businesses won't be affected. There's a range of measures in the budget, $3.5 billion in new measures that lower taxes for business in the budget. There's also generous rollover relief for 3 years so that businesses that may choose or who are using trusts can restructure their affairs if they choose ahead of the start date. And so there are a range of supports there. There's also a range of exemptions under this policy, as you would know. One of the things we are responding to is the very significant increase in the number of discretionary trusts that has more than doubled to over 800,000 now, which far exceeds the growth in the number of companies, and we are making some sensible changes to a certain, discretionary trusts, essentially.
So you're saying that discretionary trusts are not a legitimate form of? Well, I'm going to run out of time,
Well,
Minister.
I'm not saying they're not. I'm not saying they're not legitimate. People have made decisions based on the arrangements at the time. What we are saying is we are making some changes to that brings in place for a certain number of trusts a 30% minimum tax rate.
So this is going to apply then to minors, where you might apply a discretionary trust to for potentially an ailing parent, a dying or dead parent who wants to distribute money to minors. These are all going to be
trusts existing trusts as they're structured now.
Why should the government decide this? Why should not individuals be able to decide the most appropriate circumstances for their families? No, you are removing the option. You've just described that.
No,
you are
removing any option.
You're providing more complexity.
No, we're not. But
you just described that.
Any
you
option.
Are. What
we
about
are making some sensible changes. But people can make decisions that best suit their own needs, and there is a range of exemptions on offer. And your concern around small business is the evidence that we have. Our understanding is that 90% of small businesses will not be affected by any of these changes.
So the thousands and thousands of dollars that my compatriots, accountants, are going to receive as people have to reorganise their businesses, the stamp duty that they'll have to pay on moving assets. This is a significant cost to business. I'm very quickly going to turn to the appalling concept of death duties, which is morally. Let's set that aside for a second.
Any, and that is
testamentary trusts.
That is complete misinformation.
If I die tomorrow and a new discretionary trust is created under my will, am I captured by the new tax rules?
Completely misinformation.
No, I have a question.
We are making
we are
making some changes. There are nothing of the sort that you talk about. Fixed testamentary trusts, deceased estates, all of those remain exempt.
Will you let the officials answer these questions?
Well, I've answered the question.
No. Well, I want to know, if I die tomorrow...
You are trying to, as usual, misrepresent
as usual, I've only just come in.
No, you have been here throughout the day, but you are misrepresenting the reforms that we are putting forward.
Okay, I'm going to ask the officials, if I die tomorrow and a new discretionary trust is created under my will, am I captured by these new tax rules?
Laura Berger-Thompson, First Assistant Secretary, Personal Indirect Tax and Charities Division. So typically when people talk about death taxes, they talk about tax on the transport...
I'm sorry, specifically, if I die tomorrow and a discretionary trust is established under my will I be captured? Will my beneficiaries be captured?
So the transfer of your assets into the testamentary trust will not be taxed. So there will be no tax on the trust.
In the trust, the distribution to the beneficiaries.
So
yes.
So it will be,
but
in the same way as if you had, bequeathed your assets to your child, and they typically earn income on those assets, they are taxed at that income at their marginal rate.
Yes, but these are people who don't have an income. If they are minors, if they're university students, if they are disabled or have other, and they are below that threshold, they are now captured at a minimum 30%.
So the budget announcement makes it very clear that vulnerable people are exempted. So there's a range of vulnerabilities.
Holy hell! How many more complexities can you add? Previously, this was not another additional complexity, but this is what's in the worst circumstance of somebody dying. You've just added new complexities.
No, we haven't. And there's a range of a range of exemptions, and we are introducing a minimum 30% tax rate on discretionary trusts, but there are a range of trust arrangements that are not covered by this and that are exempt, including fixed testamentary trusts.
Do you concede that you're subjecting prospective discretionary trusts, testamentary trusts, to a minimum tax? That's my question to the department, to the officials.
So, in terms of prospective testamentary trusts,
yes,
that is the budget announcement. Yes,
yes,
with exceptions made for a suite of vulnerabilities.
More complexity.
Okay, I'm going to rotate the call. Senator Pocock, if you can keep it very tight.
Yeah, we're ready for bed, let's face it. Mr de Cure, it's been reported that TPB, amongst other regulators, are investigating KPMG in view of the current unfolding scandal of the misuse of confidential client information to win lucrative audit contracts. Can you update us on any investigation underway? Can you tell us whether KPMG are using legal professional privilege at all in relation to the proceedings? And can you tell us, three-part question, are you able to tell us whether KPMG has complied with its reporting arrangements in respect of possible breaches of the Code of Conduct in the Tax Agent Services Act?
Senator, in the normal outline of circumstances, we do have to balance our commitment to working transparently with you with our secrecy obligations. But what I can say to you in relation to the KPMG matter is that when we became aware of the issues that are currently being ventilated in the press, we made contact with KPMG and made preliminary inquiries. KPMG have responded to those preliminary inquiries by sharing with us the same information that they have shared with the PJC, i.e. they gave us their internal investigation report. We are not at this stage conducting a formal investigation in relation to this matter because it at this stage appears to relate to audit matters and not the provision of tax services. That said, we keep a watching brief on this because one of their obligations as a firm that is a registered tax agent is to make sure that they're behaving with honesty and integrity. So we have a watching brief on the matter, no formal investigation. They have complied with our request for information, and members of our team have conducted meetings with KPMG to discuss these matters. In relation to those discussions, I'm not aware that they have quoted legal professional privilege or tried to use legal professional privilege in any way, and that's a matter of I'm not aware of it. I am clearly aware of what is being quoted in the press about KPMG asserting their right to legal professional privilege and requesting that a PJC committee hearing be held in camera. And that's our current status.
Classic. Is the ATO...
its own decisions, not to be instructed
Okay,
by
come on.
KPMG.
We're really...
Is the
cutting it
ATO
fine.
investigating KPMG at all, and have you had any contact with them?
As far as I'm aware, no and no.
You have a contract with them. They, I understand, an audit-related contract. Is that the case?
We have several contracts, and one I think is assisting our internal audit function. And so what we'll, as you expect, what we'll need to do is to examine those contracts and rely on, of course, on advice from the Department of Finance to see if there's a whole of government approach that we need to take into account.
Will you review your relationship with KPMG?
Yes.
Thank you.
Thank you. 1 minute to go. Senator Smith.
Thank you very much.
Really appreciate that one.
It's almost over. Ms Brown, has the Treasury done any analysis or modelling on the impact of the budget measure to introduce a minimum tax on discretionary trusts as it relates to disbursements to charities, not-for-profits and other community organisations?
So, sorry. Charitable trusts are exempt.
No. I knew you would go there. Any discretionary trust can name a charity or community organisation as a beneficiary. That's correct, isn't it? So yes, you're right, charitable trusts are excluded. It says it in the budget measure. But my question, in the very, very short time that's available, first question is, has the Treasury done any analysis or modelling on the budget measure as it relates to disbursements to charities, not-for-profits and community organisations?
We are aware of the issue, Senator.
No, my question, Ms Brown, is has any analysis or modelling been done?
And I was going to ask whether Ms Berger-Thompson can indicate anything further on that.
So, as Ms Brown just said, we are aware of the issue.
No, that's not my question.
Can you just let the official provide some answer?
Okay.
I mean, they may get to there.
They may get there in the...
So the purpose of the minimum tax on trusts is to bring the taxation of income from discretionary trusts closer to that treatment which is available to individual taxpayers, your average wage and salary earners. So in the same way that an average wage and salary earner would need to pay tax on their income before making a donation to a charity, particularly one that did not have deductible gift recipient status, then that is what the minimum tax on trusts will do. We'll make sure that the tax is paid.
I regard that answer as additional information. It is not an answer. Has the Treasury done any analysis or modelling on the impact of the budget measure on disbursements to charities, community organisations and not-for-profits? You have hinted that you are aware...
I'll take that on notice, not that I'm aware of, but I'm happy to take that on notice.
You have hinted that you're aware of the issue, which is actually not my question. Analysis or modelling? Ms Brown?
So I think...
They've taken it on notice. Senator Smith.
Thank you.
Could you take on notice how many tip-offs you've got regarding the share
Saved by the
contracting?
bell. Saved by the bell.
How many tip-offs you've received?
With regard to the line of questioning that I had with regard to sham contracting?
I do have it in here, but how about I take it on notice, so just save time.
Just whisper it to me as you leave, Mr Pepper.
Thank you.
Thanks.
That concludes today's hearings. Thank you to all witnesses who've appeared and to Hansard and Broadcasting for their assistance. I remind senators that the committee has agreed that any questions on notice should be lodged with the Secretariat by 12 June 2026. The committee stands adjourned. Thank you.